I'm trying to get it from X on the cash tag. That's when I see it first. But
Let me just this.
Actually, we are already live.
We are now live. Yeah. Took a time to to convert here. So yeah, welcome everyone to Robinhood's earnings report. I'm joined here with Alejandro and Arny. You've probably seen Arny. We talk about a consulting company called Palantir.
Black box. Sorry.
Spy ops, whatever you want to call that. So we're going to go over Robinhood's earnings report, a company that is clearly not loved by the market for some reason or another, but there is a lot of value from
And
it.
there are 3 guys actually liking it.
yeah, I mean,
Yes.
when I saw you guys liking Robinhood, I was like, man, I'm not alone in the world. Like this is really exciting. It's like a little bit of a confirmation. I was like, man.
Well, I was quite timid on careful on tweeting about Robinhood because I knew it was controversial and stuff. But I have started actually studying it since the IPO because I love broker companies as a principle. I like the idea of when there is mass, they print more money, and I like things that potentially can go in the opposite direction of the market when bad things happen. And with Robinhood, I had the feeling, oh, I love this interface. Like I would think no more than 1 second to switch from my broker to using Robinhood if I could. So it's nice that almost 3 years later, we are here now finally at a price that is not. I don't consider even nice. I consider it insulting.
I agree. I had this conversation with a friend of mine today as well. He asked like, "What's so special about Robinhood?" I was like, let me pitch. But yeah,
How did you
unfortunately,
pitch it?
to be honest, very simple. Like good app, lots of options. Whether you're a trader, long-term investor. Fortunately, we're in Europe, so I mean, the ROTA ratings for us doesn't really make that much sense. But I mean, you've got so many options. Everything's very, very easy, very clear. No commission, which is great, and it will only grow with their offering. So that's already like to answer the big question: why Robinhood? I mean, why not? Why not? It's like an all-in-one app for investing or trading, whatever you want to trade, Bitcoin, cryptos, you name it.
All right, seems like it's out.
If you have it, you can. If you want to share your screen, because I'm still refreshing and still nothing.
Let me put it in the chat since you already. All right. So stock a little bit down. It seems like. Okay, I'm looking at the metrics. Everybody will look at MAUs first. So
where do you see things? Because also with Palantir, we I was streaming with Amit, and people got the results like 10 minutes before us, and I wonder. And today, someone commented me on, oh, you know that on Robinhood, I'm surprised that the releases just happen, boom, way faster than all the other services. And I was like, wait a second.
I think a lot of times they have it on the, what's it called, on the events page or the, like not on the quarterly results. That's when it goes last.
But
on the press releases.
Because I personally, even from the website you sent me.
Actually,
still nothing.
Okay. Maybe I was wrong. Maybe I saw.
Maybe it was a question.
You too. But I mean, some people already have it because I see. We're down. But I mean, I'm not super. Yeah, there it is. Wow. So also a little bit of a beat. Revenue missed. Revenue missed by 10 mil, and then we had a beat on EPS.
You want to share your screen? Yeah. I'll let you in.
Guys, I don't know how to share screen in this software.
StreamYard below.
You see
The-
share screen next to
and
settings. Present, yeah.
I see it. Okay, entire screen.
Okay.
Okay, so I mean, I'm seeing it on the feed. I don't have access to a report yet. But yeah, pretty much. So I mean, EPS came as expected. We were expecting a little bit of a negative EPS. So, but you see this, we missed on revenues. Now, when do we get the actual presentation?
I think now it's out. Yeah.
Well, I think at this point
There you
the
go.
expectations are so low that even if it misses, is like okay. I mean,
Yeah, there it is.
not the end of the world.
Yeah.
Yeah, I mean, I wasn't super fired up for Q3 in terms of, I mean, we saw the VIX was a little bit soft on
Okay,
Q3.
we also have
and
the presentation.
Okay, do you want to share if you have the presentation? I don't have it yet. I'm reading the press release. Oh, cash went up. Oh, never mind.
Ooh.
Stop screen.
Yeah, or I can do that for you.
No, Coach,
Okay.
you have to give me the rights.
Yes.
Okay, so here we are with a presentation, and we start with the net cumulative funded accounts, which basically were almost flat, grew very slightly. The assets are under custody that were basically flat, and if I remember correctly, Q2 was a very strong quarter in terms of market activity, especially in May.
Yeah, and we already got a report in August, no? Or in July, August, that said that that already showed that asset under custody was a bit lower, or am I wrong?
Then net deposits still positive, and gold subscribers actually keep growing quite nicely. And I think these gold subscribers are attracted primarily by the cash sweep program that allows people to get a 5% on the cash. Personally, if I had that option, I would love to. We in Europe actually get like 3% risk-free.
That's in a good case scenario.
Well, I'm considering Italy, and Italy is already like on the upper spectrum of the yields typically. So what we have, basically, the revenues were kind of flat. I mean, not surprised that the transactions revenues, which will be probably our kind of flat. Well, let's see. Yes, basically 2 million less than Q3. So I know this is our total transaction revenues, 185. So slight decrease from Q1 and Q2.
That's pretty much volatility. If you see on it's actually purely on options, and then wow, crypto went down a lot. Crypto went from 31 mil to 23 mil. So that's a big difference between Q2 and Q3.
And actually, it seems possible that crypto should recover a little bit right now. That there is again some interest in Bitcoin thanks to the spot ETF.
Yeah, plus the price has gone up, so that's already good for interest.
Yeah. I was telling Neil also that we changed the market maker for crypto in Q3, so that was a little bit of uncertainty, and I mean we saw the effects now. So I don't think it's just the price, but also a market maker. We changed it in the middle of Q3.
I missed this before they had the Citadel for options, if I remember correctly.
Yeah, right. But that's for
they had
that's for options.
primarily Virtu for equity.
The crypto market maker, not the equity.
No, but what I mean is, who is dealing as a market maker right now for crypto? Do you
We don't
remember?
know. I can tell you the
Okay.
one that they had before.
Okay. So I think what's interesting on my side is just to see that the operating expenses are flat, and basically it seems that the game they're playing is controlling the cost, basically preparing the platform in order to capture the next wave of interest in the public markets. And
Yeah,
for
man.
instance, basically, if they just keep think this way, like with an adjusted EBITDA margin of around 30%, that is actually positive because that's like 150 million that keep compounding on the cash balance. That also help generating further revenues in the terms of risk-free interest.
Can you go to page 12? I just want to show the net interest revenues. Yeah, that is a bright spot, and that is going to continue to be a bright spot for Robinhood. I mean, the transaction revenue is going to go up or down depending on VIX and prices and interest, right? But this is just up, only in one direction. This is the saving spot, and this is mainly why I started buying Robinhood, because of the net interest revenues.
They also
So that
said
is,
in the highlights of the press release that Robinhood Retirement continues to grow ahead of IRA season with nearly 400,000 accounts and assets over $1 billion less than 1 year after launch, which is not bad at all.
yeah, the market is dumping this like bad.
Well, there is something that I noticed previously while I was scrolling the presentation of the last time, and let's see if I can show the same thing here. Basically, if you see the difference between the asset under custody that were in 2021, where we knew that there was a strong hype, and we compare it with right now, basically we like the assets that people have on Robinhood are basically the same. The key difference is back in 2021 there was hype. Right now there is no hype, and the monthly
And the
active
difference
users are basically
isn't
half.
that bad.
Yeah,
So
another thing is, if you discount the $104 million hit that we knew we were gonna get in this quarter, we're actually positive. We're actually net income 19 million. You can see it in page 17. So we had net income of negative 85 million, but
Mhm.
you do the math, and they actually put it here in a little box.
Yeah.
They're actually gonna be like 19 million
So
or
2
zero.
cents.
Yep.
I mean, 2 cents that matter.
Yeah, I mean, Palantir was 1 cent for 3/4 or so.
So we're dumping on a quarter that, if we didn't have this regulatory one-time hit, we would have been GAAP profitable. Now we're not gonna have this for Q4, and we already saw a big spiking in October, and now we're starting on a crypto bull market. At least that's what it seems, right? We're gonna have the highest close for BTC in the whole year today, probably. So I don't know. I don't know if this warranted, because net income is gonna continue to go up, and interest revenue is gonna continue to go up. So the only thing that can fix this situation is the transaction revenue. So far so good for Q4. So, but
Well,
yeah, I
let
mean,
me
we're
say that this was widely expected. Like we had the press releases, the articles on newspapers that there would have been this 100 million hit. So definitely not surprised. Actually, I would say the positive sign. Basically, the operations are actually going in the right direction.
Do we have any mention of the UK launch?
Only
No.
in the press release saying, with an experienced team in place, we will soon launch brokerage operations in the UK.
Well, in the slide of the roadmap, they checked basically everything apart from advisory. Actually, I didn't remember this was already for 2023 roadmap. I thought it was for 2024, but great to see advisory coming soon. Futures, I think this is quite niche. I don't think it would have a wild impact. But the UK expansion is something that I would watch very closely, because so far we know that in UK they can't have the model of payment for order flow because it is banned. So it will be curious to see how they attack that market. From the interview Vlad had a couple of weeks ago, he seemed to hint that they want to basically leverage the subscription part of the business. Basically, the intuition I got is the same functionality, the same experience you have in the US, but there will be more weight on the services side.
Okay, what was MAU by the way? Was it like 10.3?
MAUs were 10 point. I'll tell you.
Because they changed the whole format of the presentation, so I'm a little bit lost.
MAUs 10.3, decreased 16% year over year.
People are gonna fixate on that number. They're gonna be, no, they didn't increase. Dump it.
No, but I mean, if you look at the profitability of things here, I mean, adjusted operating expenses increased 5% year over year. Fine, but they're lowering full year outlook for adjusted operating expenses as a result of continued expense progress. They bought back shares. For those that don't know, they bought back shares. They're also lowering their full year 2023 SBC expense once again. So yeah, I mean, of course, the algos are going to pick up at that gap net loss of 85 million and not really read these small letters underneath, which could have been much nicer. But yeah, I mean, expectations weren't that sky high for this quarter, in my opinion. But the lower it goes, the more chances we have to buy the whole thing. So,
well, we are in 3. There are quite nice people on the chat. Maybe it could be interesting in joining the leverage buyout.
maybe Amit wants to join. The buyout of Robinhood.
Can you guys look at page 9? I just want to mention something in terms of
presentation or
the presentation. Yeah, so you see Q3 seasonally is not a great quarter for net deposits. So you can see Q3 21 and you can see Q3 22. So now compared to Q3 23, which is a quarter that we're just getting today. So notice how it's actually not that bad if you take into account the seasonality of Q3 typically. And I think the reason why it's like that is because a lot of people just come from vacation in summer, so they don't have a ton of money to just put and invest. So, but I mean, it's really good to see $4 billion. And
I think the very positive thing here is regardless of how the market goes, people keep putting more and more money on Robinhood, which connects to what I was sharing before, that if the monthly active users are basically half of what they were in 2021, but then asset under custody are basically the same, it means that the average person that is active has a lot of more money, even 2x the money on Robinhood than previously. For instance, I would ask people in the chat that use Robinhood daily or almost daily, are you putting more and more money on the platform, or you just keep it there? Because I think the idea Robinhood wants to have is to be that platform where in a very recurring way, you tend to put more and more money to basically keep your company in your life, while other platforms like DeGiro from the Netherlands, those are like pure broker platforms. Like you want to trade, you want to have like a speculative account, you put money on that account to trade, while Robinhood wants to be more something you typically do also for other things, like the retirement, your sleep well approach, stuff like that.
I mean, the retirement is a big deal because not everybody, I mean, to attract more and more people to put more and more money, you have to have a product that does not require you to risk your own capital each and every time you want to open the app or use the app. So having that retirement option, IRA, I don't know, they match, I forgot how much, but is extremely crucial for the growth of the business. And then, when we'll go back into full-on bull market, they'll attract the day traders, the casino players and stuff like that, which is fine for the short term, and maybe some will stick for the long term. But yeah, I mean, going away from that casino image and going into a more traditional type of money managing app, I think is good. So yeah, X Finance here. Adam says 3% match and 1% on any transfer. Okay.
I was looking at this other component of a transaction revenue. It is not actually that small. This other represents primarily transaction revenues related to instant withdrawals and the cash card. So basically, the new acquisition of X1.
Yeah.
Mm-hmm. And then if you want to withdraw to your bank, if you want to have it like instantly, they charge you like a flat plus a percentage, something like that.
So if you withdraw money with regular times, that's free. If you want like instant withdraw,
right,
you charge. Well,
Yes,
that's fine.
Instant withdrawals around $40 million annualized Q3 revenue. Share of total withdrawals is now up to 11% from 10% in Q2 and just 7% in Q1. So yeah, some increases there.
But you see, the cool stuff is that basically the brokerage and transaction part is fixed as cost. So basically, the structure right now is set for the next volatility wave. Because look, if the brokerage and transaction cost can stay the same regardless of the volatility, but we know that if volatility happens again, then the transaction revenues would be very strong, and that would create very strong earnings for Robinhood. If already in this crappy situation, they are ready to generate around 30% EBITDA margin.
Yeah, and we know that VIX was pretty low for Q3. So I mean, it is not surprising to see $185 million in transaction revenues. The one thing that surprised me a little bit is the crypto part of that, because we know that they changed jump trading was our market maker for crypto. So that plus the low volatility in crypto for Q3, it just that was the hit right there, crypto. So we know we're probably not going to have the same hit in Q4. So if we have transaction revenues solid in Q4, I mean, the street is now expecting Robinhood to actually be profitable on a GAAP basis for Q4. But notice that they're expecting 2 cents on GAAP profit for Q4. But we would have had 3 cents on GAAP profit had we not had the $100 million hit. So put 2 and 2 together.
Okay, so nice here that they confirm that we're going to launch in the UK. After the UK, they want to launch crypto trading for European market. Here, I'm not sure how much interest there would be, but and then we want to build future trading. Have you ever traded futures?
No,
I have but not on equities, like crypto futures.
Oh, dangerous.
Yeah, I mean, it wasn't for me. I just had to automate some trading algorithm for some dudes, but it wasn't me trying to do it. I was just automating the process for somebody else.
A question for you. But I noticed also someone else on the Say Technology questions asked, why do you think Robinhood so far has not listed the bonds on its platform?
Why they haven't listed bonds? I think it has to do with, like, if you want a feature like that, it wouldn't be, I don't think they could implement that overnight. So that's number one. And number two, I don't think the user base would adopt it as fast as they would like to warranty the development time and the development cost that would imply something like that. That would be a major feature.
I agree. Like the kind of user, like I realized that even people who already like worked in finance are often not really used to the idea of a bond. I think
Right.
we are all the side effect of 10 years of investing in bond is stupid because there is no yield to get.
Yeah,
And
it's
I
very
was
niche.
talking with a friend who worked at a family office for 7 years, and he asked me, okay, but how do I actually buy a bond? Like, how can I understand if a bond is good or not? I was, are you kidding me?
Yeah, I agree. It's just, the GME and AMC crowd. I don't know how much they'll be like, hey, let me just trade a AAA bond or whatever. No, that's probably not gonna.
There are
But
some
when
crazy
do
bonds right now, but by the
yeah,
way, I mean the Apple ones are pretty good. But yeah, I mean it's very niche, so I get why it's not on Robinhood yet. I also get why they're first launching crypto in the European markets. Probably a good way to like get some early on users and then put them on a stock trading app later on when that will launch. I don't know when, because I mean the market is saturated with a lot of investing apps. So they really have to bring the full on Robinhood to Europe, because otherwise, yeah, what's the point?
Well, let me touch this point because every time I post something on Robinhood, I receive a lot of comments. Oh, Robinhood is not differentiated. There are already hundred thousands of competitors that can do exactly the same thing. And every time I end up saying the same thing. So to recap a little bit, what is your point regarding to this? Like, how true is that Robinhood is not differentiated in your opinion?
No, so because I'm comparing it because there is Cash App in the UK as well, which is nothing compared to Cash App in the United States. So that's my way of thinking here. If Robinhood does launch in Europe, it has to be the full-on Robinhood. Because if it's like Robinhood just trading crypto or just trading crypto and some stocks, what's the point? I mean, there is the Giro, there is in the UK the other app, I forgot the name. In Germany, there's another one. There is Revolut, which you can
But
do a lot of
how
things with
many
that as well.
people you know that are not investment fanatics that actually use a platform like the Giro and stuff? Because I think that's the key difference. The Giro is already something that, in my opinion, is not for the average guy. It's something that is already difficult to grasp. Like, in order to
Yes.
make a friend understand what he was doing, I literally had to stay close to him, show him, okay, this is how you do stuff. Then it's not difficult, but like I don't see, for instance, my close friends that do nothing who one works in biotech, thinking of, oh, now I open a De Giro. Like it will never happen.
Mm-hmm. Yeah, no. So I have a couple of friends, but they understand investing. And then, yeah, maybe eToro is a better example because eToro is pretty easy to use. But
So,
yeah,
for instance, why should someone use, in your opinion, Robinhood rather than eToro once Robinhood comes here?
when you say comes here, you mean
in
Europe?
In
Europe,
Europe.
yeah.
I say.
Again, if it's the full eToro, but yeah, we don't have that Roth IRA option in Europe, unfortunately. But yeah, if they come out with some good retirement plans, I don't know with who they're going to partner, then
In
yeah,
my opinion,
there is some appeal. There is ease of use. There is the brand name, of course. We can send maybe easily, transact more easily with other people that have Robinhood. But yeah, it's a pretty low barrier of entry, in my opinion. But yeah, it has the name. It has the name, which is already pretty powerful. So yeah.
In my opinion, barriers to entry is low, but the barrier to succeed is extremely high. Because there are many brokers, but at the end of the day, even eToro, I feel like it's not in such a good shape right now. Because also there, everything is leverage on the interest that is in the market. They make money from people cloning the portfolio and basically replicating the transactions. But at the end of the day, it's still a transaction. And also them, they charge a lot when you withdraw money. But I think the big thing that is missing in Europe, and I experienced that as a consumer, is the option side. Maybe it's too niche to actually make good money on that. But if I exclude interactive brokers, there are literally very few platforms that are wide enough, complete enough, safe enough to actually provide good options. And that's annoying. For instance, I'm using the best Italian broker, which is basically a fintech from 20 years. Now SoFi is cool, but this Italian bank, Fineco, was fully digital 20 years ago. Actually, even 30 maybe, but but they are the biggest Italian broker, and yet, for instance, they don't have a full catalog of options. I can only have options on the biggest US stocks. For instance, there is no Palantir, and I sent an email annoyed, hey, I want the options on Palantir. We don't plan to add Palantir on our listeners. Yeah.
Oh, is that eToro?
No,
What brokerage? Oh, okay. Yeah, I mean, it seems like that's their niche. That's their Robinhood niche. Either option trading, crypto, and now the bigger niche is, a lot of people are gonna disagree, but the bigger niche is actually interest. That's all the net deposit. That's what it is. It's like people who want to get that 4.9% interest on their money. And
potentially that would work a lot in Italy. Like if I market it well, that would make a lot of interest, because Italy is very culturally speaking, is very attached to the idea of making money from interest. In the US, people are prone to use investing stocks to invest in equity, while in Italy, culturally, we are very attached to the Italian government bond.
Right.
So yeah, but I mean, provide a reasonable yield while also expanding the coverage for the insurance, like basically a European cash sweep would be very strong, in my opinion.
Yeah, and even in the US, I think right now 20% of all assets under custody are cash. Historically, that is over 20%. Even in the GME fiasco and whatnot, it was always very high. So, it's only going to increase, especially when the yields are so high. So I think this is sort of like the future for Robinhood. And I know it sounds crazy. But it is like that already for all the other brokerages. Like if you see Schwab, I think I told you guys, I've told you many times, like 3 times, they do 3 times as much money on interest as they do on things like trading revenue or even advisory. Like trading is number 3 for them. It's not even number 2. So as for them, it's like interest 3 times, then advisory is like twice, and then the least lucrative of the 3 is actually trading. Obviously for Robinhood, it's a little bit different because their user base is very active, especially on options trading and things like that, which is, by the way, the most profitable part of it. But even then, I think Robinhood, the future for Robinhood is advisory and interest, and then they're always going to have the trading revenue part.
In my opinion, it's like you need the trading part to basically build the entire infrastructure for the most sophisticated users, and basically attract a bunch of active traders and get the reputation for that. And then basically gradually attract people who have more money, a lot less active impulses, basically that help you build the stability part, and then you capitalize on them with a final step with the advisory.
Yeah, pretty much. That has been the plan since forever. Now, as you said, if they go to Europe, but how would they enter Italy, for example? Because we know that they're trying to enter UK, but UK is a little bit different, isn't it?
Well, I think in Italy, if the market did well, they could do well. But so far, for instance, there is this company called Scalable Capital that is doing quite well. So have a search on that, share it on the screen if you can, please.
I'm not sharing.
Yeah, looking Scalable Capital. The German one.
Yes, but this stuff is actually circulating a lot between the personal finance people on
Doing Italian
YouTube.
for you.
Investing is for everyone. How you call it, piani di accumulo, when you keep accumulating ETFs?
Cumulative? Let's put it in English.
Well,
benefit from saving plans from €1.
So basically here the idea is a very skin platform in terms of stocks, because the core idea here is to put money on the advisory. Basically, or you buy ETFs on your own, or you buy advisory ETFs. Basically, what works in Italy is things that make you make yield, or things that basically manage money for you. For instance, there is this company Money Farm that is the most famous one, that where the founder is from Italy, or at least one of the founders is from Italy. And this thing worked very well because, as I mentioned previously, there was this attachment on the government yield. Now it's gradually moving more to stocks, dividends, and to this. I put the money to work and I don't care. Like the very active people and the people, let's say the degenerate people, are not that many. We are already an exception here. We are fanatics.
So who wants to explain what happens when yields go down? Because when we were talking about interest income, what happens when yields go down with interest income, and how will they benefit that way?
Yeah, so I mean, we were making interest revenue before the yields were this high. The yield, all it does is it attracts new deposits, but we make yield on margin, we make yield on lending securities, we make yield on gold. The only thing that will go down in terms of what we're interested in, it will be on corporate cash. And if they time it correctly and they spend all of that money on short-term bonds, then it wouldn't even be affected that much. But on the transaction revenue side of things, which is I think what you're referring to, we explode. Yeah, we know what happens when we have zero interest rates. Not to say that we're gonna get there, but if we get from, I don't know, what are we right now, like 5 point something, 5.25, 5.15, something like that. So if we go, let's just say 50 basis points, what does that do to equities? What does that do to trading? What does that do to volumes? What does that do to interest? Yeah, that's where we're going. So I think interest revenues stay high, but transaction revenues all of a sudden go crazy. That's what I think could happen.
Well, we already see every time there is the speculation that interest should decrease a little bit in the future, we see the equity part of the market that just goes to the moon, like in the last weeks, especially from the tech side. So connected to what we mentioned initially, if Robinhood, like inside the Robinhood app, in terms of asset under custody, there are basically the same amount that was during the pandemic, which was a period where everything was basically in bubble. It means that there is a lot of unexpressed potential right now in terms of trading revenues that is not emerged yet, for the simple reason that there is a very little incentive right now to trade a lot if you can get 5% risk-free. So if, let's make a dramatic case, interest go to zero, then having your cash in the app doesn't make any sense because all that cash yields 0. So the rational way to deploy money is deploying something that generates some yield. So that $15 million, no, is $billion. Yes, $15 billion that right now are on cash, that would become very probably or some options or some equity or or some crypto. And that basically we should have to think of interest as how much friction there is in the financial market. Buffett call it the force of gravity, because when interests are high, basically you are rewarded for doing nothing, and all the risk assets need to be valued at a price that is low enough to compete with them. So making money to circulate actually is very difficult. Also from an investment banking side, is very harder to make transactions. All the financial market on the equity side basically doesn't become that appealing. If yields go down, or let's say to the extreme case like we had to 0, that triggers a frenzy on buying stocks, because when interests are low, basically the trade-off with the do-nothing alternative becomes really favorable to put money to work somehow into riskier stuff. So the idea Robinhood is pursuing is when the interests are high, we are actually rewarded for doing nothing. But at the same time, if interest decrease from here, we benefit from having the fixed cost that we showed. And actually, there is a very interesting slide on the cost showing the breakdown back there. I don't know if you can show it. Showing that basically...
What slide?
Let me recover it.
For interest revenues or...
13. Okay, this one. Basically, as we mentioned, the brokerage and transactions are flat. So even if right now the trading activity is lower, way lower than 2021, the cost related to the brokerage and transaction, you see, is basically the same. This implicitly means that if the trading volumes increase from here, Robinhood can make very good money. And for the rest, we have technology and development, basically R&D. Operations is great to see that the company increased in size in terms of maturity, but they cut in half the cost of operations. They basically do the same thing, but with way fewer people, like Twitter, that went from 7K to 1.5. Sometimes we have some bots, but the overall experience is still good, if not better than before. And with Robinhood, they cut in half the employee, basically doubling the revenue per employee. And then we have on the general administration cost still the same. They restricted a lot. But on the marketing side, is interesting that they kept spending the same amount. I was thinking that they were spending less compared with the pandemic, but actually that is not true. So where do you think these marketing expenses actually go? Because during the pandemic, it was clear that they had the podcast, they were promoting on TV, on YouTube, there were many fancy stuff, they were giving a lot of free shares. Where do you think these marketing costs actually go?
Yeah, I mean, it's not that much. It's 27 million for a company bringing in $500 million in revenues. It's not that much, but I feel
sorry.
you know, how do you spend 27 million? It's
I confused
still a lot.
I confused the black with very dark gray green with the last one.
Yeah, it looks similar. General.
Oh, okay. So
General.
no, it's only two. So, okay. So let me rephrase it. No, actually, the marketing costs are half. Okay, so this makes sense to me now. Okay.
Yeah, even
So
then,
bas-
that's still 27 million. That's still a bit of money, you know. So where are they spending that? I doubt it's commercials, but have you seen any commercials for Robinhood lately? I don't know. I have
no,
no
but
idea.
I mean,
that's the point. If you look at it on the YouTube channel, it is a very long time we're not pushing content, and
Mm.
from my knowledge of the brokerage industry and my experience of being bombarded by eToro commercials during spikes of volatility makes it clear for me. Basically, brokers, what they do is just when there is a little volatility, they're very quiet because they know that they would spend a lot to acquire a new customer that would not trade much. But when volatility spikes, then you are super incentivized to actually spend. So basically, we need to think of marketing as a cost of acquisition per to get new users. And when there is high volatility, you'd better spend a lot because that customer actually starts generating revenue for you. In a moment like this, you'd better try to push more on the product side and let it grow more organically so that you are ready for the next wave.
Yeah,
And
pretty much.
also, as Enrique shares, snacks is probably included here. And snacks,
Definitely is, but I thought Snacks was also contributing too because we've seen you're the one who's posting the little sponsorships that they
mhm.
have. So I doubt Snack is a negative.
well, that
You know
should
what I'm saying?
enter in the other, but
Yeah,
the contribution is very low so far. But I think that is a very strong asset. For instance, today I shared another tweet of another hidden asset that could be very valuable, which is say technology, which also we mentioned previously, which is becoming the standard for connecting users from well, connecting basically retail shareholders with the company, which is something that few years ago it was unthinkable. Like
Yep.
people were not interested. Companies basically didn't care at all about actual retails investing in the company because for them investor relations meant only I deal with guys that work for hedge funds, family offices, normal funds. So the idea that there would be a retail base that has a sense made no sense for them back then. Now it makes sense. And I think this state technology is something that is just too early, but it's great to see that there is a lot of interest on that.
yeah. Can you go to slide number 10, just one above that one? So I want to point something out. If you see where it says other, since we're talking about say technology, you see Q2. Q2 is always a bump because that's proxy season. That's when say technologies gets paid most of the time. So you're gonna see that seasonal bump, but they don't break it down in terms of they don't tell us what is gold subscription, what is say technologies, what is snack, what is I don't know,
Could you
any other
remind
thing
us
that they put in there.
how say technology is actually paid? Like exactly what, like to
So the
expand what
companies,
you just shared.
yeah, so I don't have a lot of visibility into it because they don't share that. But what I do know is that Say Technologies gets paid a lot of the times when all of these companies report taxes and things like that. So it's typically in Q2. Don't ask me how. I think it has to do with the fiscal quarter. Sorry, the fiscal year. But the thing is, the companies who get their questions asked, so the public companies are the ones who pay. So the investors do not pay. But it just happens that they get paid most of that money in Q2 for in terms of the fiscal year. So you're gonna see the other revenue spike in Q2. That's why last quarter we had significantly more revenue than this quarter because you see in the other it was 31 million this quarter and last quarter was almost 60. That's Say Technologies pretty much all of it. So we're gonna see next Q2 if that number now all of a sudden gets to 70 million, that's all Say Technologies growth. But it's very difficult to pinpoint from quarter to quarter because it's sort of like Airbnb, right? They get paid on Q3. So in this case it's Q2 obviously, but there's a seasonality of things. And also, like, remember, we just posted a 29% revenue growth. So even though we missed on revenue, it's still 29% revenue growth. So we're getting punished for that lack of volatility in Q3, especially on crypto and options. By the way, the call is gonna start in 8 minutes, 7 minutes, something like that. I'm hearing the music in the background. I'm just like, I want to be alert. What are you guys looking forward to in terms of the call? Because all I want to know is the UK thing, the UK introduction. That's
I was
one
going to
thing.
say that. I want to understand how we're going to penetrate that, and
Yes.
we should not make the error to think that they will succeed doing that. And I'm saying this because my broker, Fineco, is not only the biggest broker, but is actually the best run bank. Is the fastest grower, the safest one. They started a UK expansion project just before the Brexit. They held it so far, and just a few months ago they decided, okay, we can't do that. We drop. So we can consider it in two angles. On the one side, it means that it's not easy. On the other side, we know that on the product side, Robinhood is actually very strong. The culture in the UK seems way more mature than other parts of Europe, probably because it is closer to the US mentality. People are more prone to investing. There is more financial interest. So it will be very interesting on the UK side how they're going to handle it, especially also because there they can't leverage the payment for order flow.
How are they gonna get paid in UK?
In my opinion, something like a scalable capital. Like how, like, let's say you are Vlad. How you would make the business run, like how you would get paid in the UK without having payment for order flow, like how you would structure the business.
That's a really good question. It cannot be fees because that's the whole point of Robinhood, right? So they could be their own market maker internally, but I don't know how difficult it will be to implement something like that. If it's something easy, yes, by all means you can pair buys and sells internally, right? But I don't know how difficult that will be to implement. There has to be some sort of partner that they could use, because I have a feeling that implementing something like that from scratch is going to be very difficult, or maybe time consuming. I don't want to say difficult because at the end of the day, it's just pairing orders, right? But it might have a bunch of like corner cases that are not really thought out, that you need somebody who's done that for years to sort of, help you navigate that. That's what I'm thinking. But there has to be some sort of partnership they can use even in UK to help them internally manage
something simple yet genius. But for instance, if a payment for order flow is banned, it means that they can't sell the order flow to someone else.
But is it banned in the UK, or I thought that was just like a proposition in European Union?
I know it is banned. Let's Google it again, but I remember when I searched.
Yeah, I think when we talked about it last time, I think Europe is a proposition, but UK is already. I think it's already done.
Communist.
Is payment for order flow allowed in the UK? Is prevalent in equity and options trading in the US, but it's not allowed in many jurisdictions, such as in the UK, Canada, and Australia. In early 2023, the European Union announced a planned phase-out of payment for order flow in member states that currently allow the practice.
Interesting. So yeah, they have to find another way. But look at the revenue breakdown. They're making most of their money on interest anyway. So they could get that money.
Or maybe, what if they give the orders to external people and they are not paid for the order, but they are paid in exchange. Basically the same thing, but you
You're
get
gaming
paid
the
in an alternative way.
Trying to find a loophole. Yeah.
They have pretty good lawyers. I'm sure they're gonna figure it out. But yeah, I mean, surely some analysts gonna ask it in 2 minutes. I mean, they're gonna do opening statements, and then at the end, some analysts, maybe more than one, is gonna ask about that because they always do. They always ask about that. So
I mean, the advisory part is easy, or maybe they just give almost everything for free just to force you to put money that they manage with the advisory. I don't know.
yeah, we'll see.
Do you hear the music?
Yep.
Okay.
Let me close
Chill.
my tab.
Chill
Because,
lobby music.
yeah, this is epic.
Yeah, it's going to be interesting, but I mean, UK is exciting, but yeah, maybe some promising comments of how Q4 is going to look like. I think that could definitely move the stock a bit, and then get a better sentiment at what they're seeing with Robinhood. Because with the crypto stuff, I didn't really have a look at what Coinbase reported, but I don't think it was that bad. So yeah, maybe if anybody here has seen the Coinbase earnings report, I think it was last week, how they performed and how their crypto transactions were going, maybe that can be a tiny indication. But yeah,
I mean,
as
they
you
did 674 million on revenue, and then on EPS was break even, pretty much. A little bit of free cash flow as well. So I mean, and the stock actually went up a good, I don't know, it was at 70, and then it went up all the way to 90, and it's still doing good today. But the thing about crypto is like the bump, right, in price for BTC started in October, so
Yeah.
we won't see this today with this report. So
No, for sure.
but the outlook, we definitely probably be useful
Yeah.
to get that outlook. Did it start already?
No.
Still getting
Still-
music.
I have a question
Still
for
music.
you. Robinhood introduced the 24-hour trading
Yeah.
on 5 days.
Ah.
Do you think that already started to generate an impact?
No, I don't. It might be minimal. The reason why is because they introduced the end of Q2, early Q3,
Right.
and I mean, you saw the volumes for Q3. I mean, I forgot what page it is, but the volumes were brutally low for
Mhm.
Q3. So even if we would have seen it in the volumes, it's just the interest wasn't there in Q3. So yeah, anyway.
Thank you, Carmen, and thank you to everyone for joining Robinhood's Q3 earnings call. With us today are CEO and co-founder Vlad Tenev and CFO Jason Warnick. Before getting started, I want to remind you that today's call will contain forward-looking statements. Actual results could differ materially from our expectations, and we have no duty to provide updates unless legally required. Potential risk factors that could cause differences, including regulatory developments that we continue to monitor, are described in the press release we issued today, the earnings presentation on our investor relations website at investors.robinhood.com, our Form 10-Q filed this afternoon, and in our other SEC filings. Today's discussion will also include non-GAAP financial metrics. Reconciliations to the GAAP results we consider most comparable can be found in the earnings presentation. With that, let me turn it over to Vlad.
Thanks for the intro, Chris, and thanks to everyone for joining us today. It's been nearly 10 years since Beju and I first launched the waitlist for Robinhood. Back then, nobody had heard of fintech. Customers were paying $7 to $10 every time they placed a trade at one of the discount brokerages, and people were generally skeptical about using their smartphones for serious financial matters. Investors were also skeptical about Robinhood's prospects as a business. They viewed the idea of us entering a highly regulated market with large entrenched competitors as a fool's errand. Even if we were to succeed in bringing our product to market, would anyone want it? The conventional wisdom at the time was that individual stock investing was dead and that all anyone needed was index funds. We spoke to nearly 100 investors before we closed our initial seed round at a $10 million valuation. Almost 10 years later, we're serving over 23 million customers in the US. Our surviving competitors have been forced to adopt our business model and even to adapt their user interfaces to be similar to ours. And Robinhood is no longer just a trading app. We've been rapidly evolving into a broad financial services platform serving multiple financial needs, including spending, savings, and retirement. Our ambition and the opportunity ahead of us has expanded greatly. And so it still feels like we are at the beginning of our journey. We're still number 2 in retail trading market share in the US. We're at the very early stages of expanding beyond trading with just over $1 billion of retirement assets on our platform out of the over $12 trillion US IRA market. We are also just now beginning to take our first steps to serve customers outside the US, where we believe the need and opportunity for innovation in financial services is even greater than it is domestically. As we continue to execute on our strategy, we believe we can grow into one of the largest and most profitable financial companies in the world. I'm excited to talk to you about our progress, but first, let's review our Q3 high-level business and financial results. It goes without saying that the macro environment of the past few years has been challenging for investors. Geopolitical tensions are continuing to increase, interest rates are at 30-year highs, and household savings are being depleted at a rapid clip. I want to explain the 3 things I look at a company level to ensure Robinhood emerges from this challenging environment stronger than ever. First, financial health. You've heard me mention over the past year that I want to ensure Robinhood is a sustainable business, not just in bull markets, but in all market conditions. Put in a lot of work to make this a reality. We had our first quarter of GAAP profitability as a public company in Q2. And in Q3, total net revenues were up 29% from a year ago. And by keeping our costs lean, we more than doubled our adjusted EBITDA margin year over year. This is all while making big investments across product, customer service, and international expansion. Second, company culture. I believe very strongly that small groups of highly motivated and talented people can out-execute incumbents with over 10x the headcount and resources. I believe we have the highest concentration of talent in the history of the company, and over the past year, we have turned the crank even more on ensuring we are hiring, retaining, and motivating the highest caliber people across all of our positions. Third, product velocity. We use a number of metrics to track this, and right now, by several key metrics, our product velocity is the highest in our recorded history. We move fast, and we've been simultaneously improving our service quality. Now, let's turn to our 2023 roadmap, which, as you know, we've organized into 3 areas: deepening relationships with our customers, innovating for our active traders, and launching new growth opportunities. Let's first talk about how we're deepening relationships with our customers. Success in this part of our strategy means that Robinhood becomes the most important financial relationship for a large portion of our customers. This will lead to a healthier and more diversified business, and you should track our progress here by Gold subscribers and net deposits. Robinhood Gold continues to be our #1 focus in deepening relationships with our customers. Over the past year, as the environment evolved and customers were looking for new ways to save and invest, we put a lot more value in Gold by adding a 4.9% APY on uninvested cash and a 3% match on IRA contributions. As a result, subscriptions are now over 1.3 million, and growth is accelerating as we added 100,000 in Q3 alone and 240,000 over the past year. Today, 6% of Robinhood customers are Gold subscribers, and new customers are joining Gold at more than double that rate. Gold customers have tens of thousands of dollars in average assets under custody, up more than 60% year over year. And they've opened IRAs with us at 7 times the rate of non-Gold customers. As we look ahead, we want the majority of our customers to be Gold subscribers, and we're taking a number of steps to make that a reality. Alti is one of them right now. After acquiring X1 in July, our team has been hard at work creating an awesome credit card, and we've got something special planned for Gold customers. You'll hear more about this early next year. Now, let's discuss active traders. We are laser focused on being the #1 platform for active traders, and we track our progress here by market share. Our focus has been on systematically removing any limitation that would lead an active trader to consider using another platform, with a particular emphasis on pricing, speed, and app usability. In the past quarter, we streamlined our equities trading flow, introduced options chain customization and an option P&L simulator, and more than doubled the number of stocks and ETFs available to trade 24/5 on Robinhood 24-hour market. For our crypto customers, we've rolled out some changes to the user interface on mobile so that customers can clearly see the spreads that we offer on our crypto transactions. This makes it easier for customers to see their all-in cost of execution, compare it against other platforms, and see how great of a deal Robinhood is giving them. As we deliver for our active traders, we continue to see our market share of retail trading grow. In Q3, both our equities and options market share increased from Q2 and year over year. Let me now talk about futures. We're getting closer to unveiling our offering there, and we have been hard at work building what we believe is the best designed futures product, particularly on mobile. Competitors generate hundreds of millions of annual revenue from futures trading. So as we continue to execute, we believe we have a real opportunity to expand the market, take market share, and build a 9-figure revenue business over time. The third part of our 2023 roadmap is exploring new growth opportunities. Here, we have been laser focused on international expansion. In the US alone, we've built a business with 23 million customers that serves nearly 10% of American adults. But there are billions more potential customers across the globe, and as we serve them, we believe our business can evolve into one where the majority of our customer base is outside the US in the years to come. Our approach has been to build the capabilities for international expansion organically. This allows us to scale in a capital-efficient manner while easily sharing our capabilities across multiple geos. For example, with the launch of Robinhood 24-hour market, we became the first US broker to offer round-the-clock trading of individual stocks. Our customers in the UK will benefit from this and other platform enhancements, as 24-hour market will be available in the UK at launch. Two major things are happening in the coming weeks. First, we'll launch brokerage operations in the UK. We look forward to eliminating commissions in that market, just like we did in the US. Also in the coming weeks, we will launch crypto trading in the EU. Crypto benefits from a relatively clear regulatory framework in the EU, and we're excited to bring our capabilities across the pond to better serve that market. As I reflect on all that Robinhood has in front of us, I'm energized by our long-term potential to innovate for our customers, grow assets, gain market share, and continue to disrupt our industry. We're really excited about the roadmap ahead, and there's so much to do. With that, I'll turn the call over to Jason.
Thanks, Vlad. It's good to speak with everyone today. In the third quarter, we stayed focused on serving customers, growing our business, and driving long-term shareholder value. Our team continues to execute on our product roadmap while growing revenues and delivering strong operating leverage in the business. In a very different macro environment than 2 years ago, we believe we have a good shot of delivering record annual revenue in 2023. And our adjusted EBITDA this year is on track to be roughly 3 times our prior record. We're also excited to see momentum continuing to build, with growing market share of retail trading and increased customer adoption of our new products. Taking a look at new products, Robinhood Retirement has over $1 billion of AUC, and our new 3% contribution match for Gold members is making us really excited for IRA season. Securities lending enrolled nearly 400,000 customers in Q3, bringing our total to nearly 2 million customers with over $10 billion of balances. Robinhood Gold grew by 100,000 subscribers in Q3 alone, bringing the total to 1.3 million subscribers, roughly double the pace we've seen in the past few quarters and the biggest increase in over 2 years. And we're also pleased to see over 10% of withdrawals are done through Instant. so we love that our revenue drivers keep moving higher. Let's look at our business results in the third quarter. Net deposits remain strong in what is typically a seasonally slow quarter. They were $4 billion in Q3, which translates to an 18% annual growth rate. And over the past 12 months, they grew at 27%. AUC ended the quarter at $87 billion, up 34% from a year ago. While equity markets were challenging in Q3, we're optimistic that the continued strength of customer net deposits and long-term market appreciation will be a powerful tailwind to our business over time. Now let's turn to our financial results. As a reminder, last quarter we reached GAAP profitability for the first time as a public company, generating $25 million of net income or 3 cents of EPS. This quarter, we recorded a $104 million regulatory accrual for historical matters, as we previously disclosed. This led to Q3 results moving back to a loss, with net income of negative $85 million, or a loss of 9 cents per share. Q3 net income prior to this accrual would have been positive $19 million, or 2 cents per share, which would have been similar to last quarter. In Q3, we generated adjusted EBITDA margins of 29%, up 16 points from a year ago. Adjusted EBITDA was $137 million in Q3 and $485 million over the past year, which is nearly a $900 million improvement compared to our first year as a public company. So the natural question is, how do we drive profitability even higher over time? We're focused on 2 things. First, growing revenues. We want to serve more of our customers' financial needs, become number 1 in active trading, and expand internationally. Second, we want to stay lean as we scale. Our cost structure is roughly 90% fixed, which supports high incremental margins and operating leverage, and we will continue to push on our fixed costs wherever we can. So we think we have a good path to higher levels of profitability over time, and we look forward to sharing our progress as we go. Now let's review Q3 revenues. Total net revenues were $467 million, up 29% from a year ago. Revenues were down 4% from Q2, as growth in net interest revenue was offset by lower transaction revenues and seasonally lower proxy revenues. Transaction-based revenues in Q3 were $185 million, down 4% sequentially, primarily due to lower crypto volumes. Moving to net interest revenues, they were $251 million in Q3, up 7% sequentially. The increase was driven by higher interest earning assets and short-term interest rates, partially offset by lower securities lending. Looking ahead, we are watching a couple of areas that so far in Q4 are in the lower part of their cyclical ranges. Specifically, Q4 to date securities lending activity is well below the third quarter average. Additionally, Q3 net buying was the highest level we've seen in over a year, which drove free credit balances lower in the third quarter. So far in Q4, net buying has moderated, so free credit balances have increased by a few $100 million. But if the current levels of securities lending and free credit balances continue, we anticipate Q4 net interest revenue will be roughly $20 million lower than Q3 levels. Looking beyond Q4, we have a much more constructive outlook for net interest revenue as we continue to attract customer cash and net deposits, enroll customers in securities lending, and prepare to grow our credit card business. Moving on to other revenues, they declined sequentially to $31 million in Q3 as seasonally lower proxy revenues were partially offset by growth in gold subscriptions and Sherwood Media advertising revenue. I also want to share some additional color on what we saw in October. We added another 30,000 funded accounts, and customers contributed another $1 billion of net deposits to Robinhood. Additionally, October trading volumes picked up from September. Relative to Q3 monthly averages, October options and crypto were roughly in line, and equities were about 10% below. I also wanted to note that we often see lower trading volumes in November and December around the holidays. Looking at expenses, we continue to make significant progress investing for long-term growth while driving efficiency by lowering our full-year costs from 2022 levels. Starting with adjusted OpEx, which reflects total operating expenses, less SBC and the regulatory accrual, it was $353 million in Q3, below our prior outlook range. This brings our year-to-date total to $1.06 billion, or 76% of revenues. As we invest for the long term and scale our business over time, we are focused on leveraging our highly fixed cost base to drive adjusted OpEx lower as a percentage of revenue. Reflecting on our progress year to date, we feel good about our expense discipline while continuing to invest for the long term. So in Q4, while we plan to keep driving efficiency across our business, we plan to make some targeted growth investments in marketing and product launches, including for the UK, futures, and credit card. We also anticipate some short-term elevated legal expenses related to the historical regulatory matters I mentioned earlier. Given this, we're planning for Q4 adjusted OpEx in the range of $375 to $395 million, which slightly lowers the midpoint of our full-year outlook and brings our 2023 adjusted OpEx range to $1.435 to $1.455 billion. This full-year outlook has us on track to save around $75 million from our 2022 level. Turning to share-based compensation, it was $83 million in Q3, below our prior outlook range. SBC as a percentage of revenue was 18% in Q3, down from 30% a year ago. We're managing SBC costs closely, so as we scale our business over the coming years, we're focused on driving it closer to 10% of revenue. Looking ahead to Q4, we're lowering our 2023 SBC outlook again by an additional $50 million. Our updated outlook for full year 2023 SBC is a range of $860 to $880 million, which implies a Q4 range of $70 to $90 million. Just to put that in context, if we look at the midpoint of our Q4 range on an annualized basis, that's about $320 million, which represents an annual savings of over $300 million versus 2022. And looking at dilution, prior to our Q3 share purchase, diluted shares were up 1.2% through the first 3 quarters, well below our initial full-year outlook of 4% or less. Now let's turn to capital management. We are focused on maintaining a strong balance sheet while deploying capital into opportunities that drive growth and shareholder value. Over the past year, we generated nearly $500 million of adjusted EBITDA, and in Q3, we deployed over $700 million to purchase 55 million shares of our stock and to acquire X1. We still finished the quarter with nearly $5.5 billion of cash and investments. We know we still have a lot of cash on hand, but in this macro backdrop, we like the balance sheet strength and optionality it provides. In closing, I'm excited about the momentum we're building and believe we have a huge opportunity ahead of us. We believe we can deliver new capabilities and enhance customer experience while producing great financial outcomes for our shareholders. With that, Chris, let's move to Q&A.
All right. Thank you, Jason. For the Q&A session, we'll start by answering shareholder questions from Say Technologies. These are ranked by number of votes. We'll pass over any questions that we already addressed on this call or in prior quarters. We'll also group together questions that share a common theme. After that, we'll turn to live questions from our analysts. So I'll kick it off with our first question from Say. I'm going to put 2 together here, and these are for Jason. Massey R asks, your stock price has been floating between $9 and $12 for over 2 years. What will it take to bring it back to the IPO price? And Feng N asks, with all these new incentives happening on Robinhood, why has Robinhood not been able to raise its stock price back to the IPO level?
Thanks for the questions. So first of all, we hear you. It feels like we've made a ton of progress, and we just haven't seen it translate yet to a higher stock price. On a macro level, interest rates are up, which generally isn't good for stock prices, and it hasn't been good for fintech companies. But we're staying focused on things that are in our control, like growing our business and driving profits higher. Over the long term, we think this is the approach that'll move our share price up, and we appreciate your questions.
All right. Thanks, Jason. The next question is for Vlad. I'm going to put together 2 here as well. So Brant C asks, would it be possible to add a dividend information tab? And Jeremy J asks, we continue to ask for a dividend forecasting management tool. When will that feature come to fruition?
Yeah, thank you. We're always looking for ways to improve our customer experience. So thank you for these suggestions around dividends. I actually reached out to the team and asked them to make sure this is added to the roadmap. So it'll be done.
All right. Thanks, Vlad. The next question is from William W., who asks, the biggest thing that seems to be driving your turn to profitability is the high interest rate on your cash pile. What will be the plan to maintain profits when the Fed reduces those rates? Jason?
Yeah, so one of the nice things about our business is that it's naturally hedged for changes in interest rates. Trading revenues and interest income tend to move in opposite directions. So we think we're pretty well positioned to perform financially regardless of the rate environment. We've seen this play out over the last few years. In the lower rate environment, trading revenues were strong, but with rates moving higher, trading revenue abated some, but interest income has picked up. So at the same time, we're continuing to invest to grow our business through the cycle. So for higher rate environments, we've launched things like gold high yield, as well as fully paid stock lending. And for when higher trading environments come along, it's great to see that our market share is up in equities and options as we continue to invest in our platform. So overall, we feel really good about our position regardless of what interest rates do.
All right. Thanks, Jason. The next question is for Vlad, and it's from Malcolm D., who asks, what will Robinhood do to grow market share and expand operations?
Yeah, happy to answer that. So to start with, our market share has been growing. If we look at equities and options, market share is up year over year and also sequentially for the past 3 quarters in a row. And as we look at opportunities to grow even faster, right now we can see we're winning in mobile. And we think that's great because clearly that's the fastest growing part of our industry. I think the long-term trend will continue to be more and more of the legacy brick and mortar based and web activity moving in the direction of mobile. I think it's also important to note that a couple of our key competitors are going through merger-related integrations right now. So we've got TD Ameritrade merging with Schwab and E-Trade through Morgan Stanley. And we've seen actually a lot of customers complaining about those integrations, being forced to abandon some of the user interfaces that they'd like, not really satisfied with the mobile products that they're being asked to convert to. And we've been seeing really, really healthy and growing inflows from both of those competitors. And actually right now, to accelerate that even further, we're running a 1% match on ACATS, not just into retirement accounts, but also into taxable accounts. And so we're excited to share even more value with customers through that offer. So doubling down on our leadership in mobile, and also we're continuing to expand and improve the product experience across the board.
All right. Thank you, Vlad. The next question is also for you. Todd Z asked, what is Robinhood doing to convince long-term investors to stay and grow with Robinhood rather than transfer to other accounts when they reach a higher net worth?
Absolutely. Thank you for that question. This is a key part of our strategy. When I say deepening relationships with customers, that really starts with making sure as they grow and as their needs evolve, Robinhood is the platform for them and can serve the wide variety of the financial needs that they have. So our biggest investment and area of focus here is around Robinhood Gold. As you know, Robinhood Gold launched a competitive rate on uninvested cash, which allows customers to take advantage of the high rate environment we're in and earn a high yield on cash even when they're not investing. So right now that's 4.9% APY. And a nice bonus is you get up to $2.25 million in FDIC insurance protection. So it's actually superior to a traditional savings product that you might find at a bank in the level of protection, not to mention the yield. We recently rolled out an unprecedented 3% retirement match for Gold customers. So basically, with the new IRA contributions limits slated to increase to $7,000, that's an extra over $200 a year in bonus that you could be getting just by fully funding your retirement account, which is a deal that you can't find anywhere else. And so the sort of confluence of this is once you become a Robinhood customer, we're seeing more and more of those customers adopt Gold. Once you're in Gold, you get an industry-leading value and the user experience across a wide plethora of our products. So if you want to retire with us, you can't get a better deal elsewhere. If you want to generate cash, even if you're not investing it, yield on the cash, we offer that. And we're continuing to add more and more features and value in Gold over time. The upshot of that is Gold balances have been increasing at a very healthy rate. You've seen the progress we've made in Gold subscribers. Our churn and retention, particularly of our most valuable customers, continues to improve. And we think we're just getting started. We're hard at work making this better and better. But I do think we're actually seeing our strategy paying off, and you're seeing demonstrated progress in increasing wallet share and actually creating these relationships with customers that are significantly deeper.
All right. Thank you, Vlad. The next question is for Jason from Radley S., who asks, what can Robinhood do in order to become consistently profitable throughout each quarter?
It was great to achieve GAAP profit last quarter. It was our first time as a public company. This quarter, but for the regulatory accrual, we would have seen another quarter of GAAP profits. But looking over the long run, we're going to keep investing for growth. But we think we've got a good opportunity to invest for growth and grow revenues faster than costs, which should deliver nice leverage and profitability for the bottom line over time. We're a tech company. A vast majority, up 90% of our costs are fixed costs. And so we think we're well positioned to have high incremental margins as we grow the top line.
All right. Thank you, Jason. The next question is for Vlad. It's a two-parter. Massey R. asks, when are you going international? And Thomas B. asks, when will Robinhood come to Europe?
Great questions. The answer to both of those is basically now. So I'm excited to say we're getting really close to launching our brokerage in the UK. We should be live in the coming weeks. I'll actually be there knocking on doors in the UK, maybe not literally, but with the team for the launch. And we also announced earlier in my opening prepared remarks that we will be offering crypto trading across the pond in the EU. And that's going to come right on the heels of the UK brokerage launch. So both of these launches are exciting. They expand the addressable market of customers we can serve with our financial products. And they're really the first steps in what we see as a big opportunity for us growing the business internationally.
All right. Thank you, Vlad. That concludes our shareholder questions from Say Technologies. We appreciate our shareholders taking time to ask these questions of Vlad and Jason and look forward to more next quarter. Now I'll turn the call over to Carmen to lead Q&A from our analysts.
Well, thank you, Chris. And as a reminder, if you do have a question, simply press *11 and wait for your name to be announced. Please stand by for our first question. And it's come from Dan Dolev with Mizuho. Please proceed.
Hey, guys. Great results despite, the difficult environment. I have two questions, two quick ones. So maybe, Vlad, can you tell us, what makes you gain so much share? I know it's a difficult environment, but you guys are gaining tremendous amount of share. Can you give us some color on what makes Robinhood gain so much share? And then I have a very quick follow-up. Thanks.
Yeah, thanks, Dan. Talking about our active trader offerings, as I mentioned earlier, our goal is to be the number one platform for active traders. And we have been gaining share. You're right that I pointed out year over year, and for the last 3 quarters sequentially, we've seen our market share of options and equity transactions continue to increase. And part of that is just the work that we've been doing systematically to improve the pain points that customers have for the product. More recently, you can see we've continued to make improvements in options trading. we added things that customers have been asking us for, like the ability to customize options chains and better picture their P&L. We're looking at the experience for equities trading across the board. And as we sort of used it and dug deeply into it, we noticed that in the past, we had really optimized it toward more of a novice customer. So there was a lot of explanation for how to place different types of orders. And for someone that was more active and more of an active trader, we saw an opportunity to streamline it and reduce a lot of the unnecessary steps in the process. And we've been doing that across the board, not just in the trading flows, but across the experience. We're also turning our attention to giving more data to customers to make more informed decisions. And you're going to start to see a lot of our work there rolling out in the coming weeks. And I've got to mention also not just kind of table stakes features. We've got a ways to go to continue to close the gap, but we're leading in pricing. Obviously, for options, most of our competitors are charging 65 cents per contract. For typical trades in the hundreds of contracts, that adds up to lots and lots of money that is coming out of their pockets. And our pricing advantage is strong and continuing to drive value for us. And new innovative things that you can't find anywhere else, really, besides Robinhood. Things like Robinhood 24-hour market are also continuing to play there. And all this is adding up to the share gains that you're seeing and active trader NPS across, and that's Net Promoter Score for those that aren't familiar, across options, equities, and crypto, seeing significant gains that are just continuing to accrue.
Terrific. I do have a quick follow-up. I mean, it looks to me like Robinhood could be a great place for traders to benefit from the future Bitcoin ETF. Can you maybe talk a little bit about the opportunity if it exists?
Yeah, I think that what you're seeing is Bitcoin continuing to become attractive to more and more stakeholders as a mainstream asset for diversification. There has been a long-held thesis that it's a good inflation hedge. And obviously, in a high inflation environment, people are interested in ways to diversify their exposure. Robinhood has been early to offer Bitcoin in its native form. And maybe you heard me mention in the prepared remarks that we've actually made a lot of improvements in the crypto user interface. We're showing customers the spread and their all-in cost of execution. And I think we've talked about, Dan, in the call before, how Robinhood has really, really competitive pricing, but maybe customers aren't aware of that. There's not a lot of transparency around it. So we're looking to solve that problem. We believe we have solved it. And I think that more and more customers will see just how great of a deal they're getting with their ability to diversify their portfolio into cryptocurrencies. So we want to continue to be a leader there. And I think that, we're excited about the progress we've made, and there's a lot more to do.
That's great. We're excited as well. Thank you.
Thanks, Dan.
Thank you. One moment for our next question. And it's come from the line of Devin Ryan with JMP Securities. Please proceed.
Great. Thanks so much. Hi, Vlad. Hi, Jason. How are you?
Doing great.
Hey, Devin.
Hey. So, looking forward to international launch. A lot to be excited about there. I just want to think about, the opportunity, or how you guys think about the opportunity, either near or long term, to build your own market making capabilities to participate in more of the economics. And particularly as you scale the offering, I suspect that could be an opportunity, but just want to get some thoughts there. And then if that's not something that would make sense, just how you're thinking about the unit economics internationally, appreciating that trading is just going to be one part of the longer term game plan of making a relationship with customers. Thanks.
Yeah, and you're referring to international specifically when you're talking about market making?
Right now I am, yes.
Yeah. Yeah, look, I think our focus right now, there's obviously lots and lots to do in our business. As you pointed out, there's all the stuff we're doing on the consumer side to win in active trading. There's obviously ways to leverage that infrastructure that we're building to process our customers' trades as a B2B offering, and market making is kind of in that category. Where we stand now is we're just laser focused on consumer. We want to make sure we're the best consumer offering out there, particularly internationally where we're kind of new to market. We want to make sure that as many of our resources as possible are pointed towards product market fit of the consumer offering. And there's lots of ways that we can monetize. Gold subscription, you've heard that product we have a lot of confidence in, and it's just in the early stages. We think that it can be just as powerful, if not more so, in the UK. Securities lending and other interest-based revenues. So yeah, we're not really focused on diversifying into B2B or market making for the near term, but it's obviously something we're familiar with. Once we start getting to the point where that makes sense as a priority, we'd certainly be open to considering.
Okay. Thanks, Vlad. And then just to follow up here on X1 and the kind of the credit card strategy, appreciate the new net new interest disclosure around cards. And so I just wanted to maybe hear a little bit more about the scaling strategy of X1's business across Robinhood and kind of timeline that you guys are thinking. And then also maybe on the other side, whether there's any consideration of growing a little bit slower just to get some data around customer behavior and also just thinking about potential for credit risk as well. Thanks.
Yeah, I'll be happy to field that. I think we're going to build a great product. We actually just reviewed and approved the final designs for what's going to become the Robinhood credit card last week. So we've been making good progress. The team is super motivated to launch it. And we do anticipate there will be a period of learning. Of course, X1 has had some data from their customer base, but we anticipate once we release this new product, the scale of Robinhood's customer base is much bigger, and so we'll want to make sure that we're rolling it out prudently. But the thing that I'm most excited about is you guys seeing it, customers seeing it. I think we've spent a lot of time getting the user experience and the design just right, and I think you're really going to love it.
All right, terrific. I'll leave it there. Thanks.
Thank you.
One moment for our next question. It comes from the line of Steven Chubak with Wolfe Research. Please proceed.
Hey, good afternoon. This is Michael Anagnostakis on for Steven. Maybe just one for Jason here on expense. You had noted that you will continue to be disciplined on the expense front. You highlighted the largely fixed expense base. As we think about expense beyond 23, what do you see as a reasonable core expense growth rate to sustain that 20% growth, organic growth that you've consistently delivered recently? Thank you.
Yeah, thanks, Michael. Appreciate the question. We've made a ton of progress on operating costs and running lean and driving for productivity and efficiency across our platform over the last year and a half. And I'd say that we're not done. We've got more work to do there, to be even more efficient and more lean in the way that we operate. That said, we're going to continue to invest for growth. We see a lot of opportunity ahead of us than behind us in terms of the business, including international. So we're going to place some smart investments in a number of areas. I'm sure you can appreciate this is the time of year when the teams are huddled doing 2024 planning. So it's a bit early for me to comment specifically on the growth rate we expect to see on OPEX next year, but you should expect that, over a longer horizon, our intention is to grow revenue faster than OPEX. And we think that there's, even while making investments, there's opportunity for us to be lean in the way that we manage our costs.
Great, thanks. And then for my follow-up, I just wanted to touch on crypto again here. We've seen some stronger performance in Bitcoin and Ethereum, for example, but the volume trends have remained pretty subdued, both industry-wide and at Robinhood. But can you speak to what's driving that divergence there, and what do you think needs to happen for activity to pick back up in crypto? Thank you.
Yeah, I think it's hard for me to speculate on activity predictions in the broader cryptocurrency market. I can tell you what we're focused on. We're focused on using this as an opportunity to build our capabilities, build the platform. You've heard me talk in this call about how we want to make sure customers who are using Robinhood for crypto know that they're getting terrific pricing. And so we've continued to make progress there. We are improving the customer experience, and the team is hard at work launching in the EU, which will expand the addressable market of customers that we serve by hundreds of millions. So we're excited about that. We're going to continue to innovate and improve the offering in the space. I think there's lots of promising signs. Lots of people are spending time building the industry. We're going to continue to be a leader there.
I think the one thing that I'd add is I think it'd be helpful, to continue to get some regulatory clarity in the various markets that we're going to be operating in, and that'll allow us to innovate even faster.
Thank you for taking my questions.
Thank you. One moment for our next question, please. It's from the line of Michael Cyprys with Morgan Stanley. Please proceed.
You there, Mike?
Mike, please check your mute button, please. All right, please rejoin using the Call Me feature. One moment for our next question. It comes from the line of John Todaro with Needham. Please proceed.
Great. Thanks for taking my question. Vlad, you mentioned earlier that the EU had a clearer regulatory framework around crypto in the U.S. I'm just trying to understand in that context what kind of products or services that you could tangibly point to there. Would you envision kind of more assets for trading in the EU than the U.S.? Just anything that we can kind of tangibly look to?
I really don't want to get ahead of the launch that's coming in a couple of weeks and tell you what the value props are going to be. But yes, in general, we do expect, given the clarity, to be able to offer a different set of assets and capabilities in Europe as in the U.S.
Okay, thanks for that. And I guess just quickly, if I can add another one on, taking the other side of that, looking at the U.S. market, you guys recently delisted some of the crypto assets. What would give you comfortability to relist some? Is it some of these ongoing suits maybe with Coinbase that need to get resolved? Any clarity there?
Yeah, I think that it's hard to say what specifically we're waiting for to give us comfort. I think that rules, rulemaking, court case data, that all helps. And of course, we'll continue to push for regulatory clarity, because I think it would be a shame for the innovation that we've been seeing in crypto to be co-opted overseas. I think it's very, very important for the U.S. to remain a leader in every new technology and industry that we possibly can.
Yep, agree with that. Thank you. Appreciate it.
Thank you. One moment for our next question, please. And it's from the line of Ken Worthington with JP Morgan. Please proceed.
Hi, good evening, and thanks for taking the question. One of the footnotes in the release today talked about ACATS in and out, and you mentioned getting inflows from former Ameritrade and E-Trade customers. I'd love you to compare and contrast where ACATs to Robinhood are coming from generally and where ACATs going out of the firm are generally going to. And then you mentioned the 1% match. When did that go into effect? And then maybe lastly, what sort of ACAT activity are you seeing from firms that are more traditionally known for active trading? Thanks.
Yeah. As I mentioned earlier in the call, we have been seeing elevated ACATs from the firms that are going through integrations. I mean, the active trading firms, TD Ameritrade has been very strong with active traders, and we've been seeing really healthy and growing inflows there. The 1% match, as you probably know, that started out being a retirement offering. We've expanded it to ACATs in taxable accounts. And I think that's currently in the process of rolling out and being communicated to customers. So it's pretty new. But what we're seeing there has been really, really good. I think that just gives customers an added incentive, the ones that were already thinking about it and using Robinhood to consolidate their assets here. We've been really happy at the trends there.
In terms of the more active trader locations, the ins and outs are actually pretty modest overall, so nothing really to call out there.
Okay. And then, so you've got ACATs going out as well. Are they going to the same firms where you're getting assets coming in, or is it a different sort of set of firms where clients are heading out towards?
Yeah, it's really pretty broad-based across inflows and outflows and common firm names, as you'd expect. Okay. One thing we like is that the trends are improving for us as we continue to improve user experience.
Okay, great. Thank you very much.
Thanks, Ken.
Thank you. And we have time for one more question. One moment, please. And it's from the line of Benjamin Budish from Barclays. Please proceed.
Hey, this is Chris O'Brien on for Ben. I wanted to ask you about the options take rate. Looks like it came down 4 basis points or so quarter over quarter. Is there anything you can share regarding the drivers here as to what's driving the change in the take rate?
Yeah, so first of all, the take rate was 41 cents. This quarter. There's 2 primary things that go into the take rate that we realize on option contracts. What I'd point you to, it's volatility, and then it's also mix of contracts. Specifically, we're seeing increasing mix as we have for some time now of SPY contracts. Over individual name contracts, and that has been a headwind for us on the take rate.
Okay, very helpful. And I also just wanted to follow up on the international expansion. When we think about the launch of the UK product, like what kind of products will be available on day one? How long of a ramp will it take to kind of fully get capabilities up to something like we might see in the US?
Yeah, I'll field that one. So I did mention that equities trading, in particular, 24-hour market, will be available at launch. In terms of the other value props, I again would rather not run ahead of the announcement. Like we'll find out very soon. The benefits of doing our international expansion organically is we can leverage the same platform. That's why Robinhood 24-hour market is available at launch. It's all on the same platform. So there's really no technical limitation to making our services available anywhere that we operate. It's all just a matter of licensure and making sure that we have the appropriate licenses for all the different products we offer. And I think you're really going to start to see the organic strategy paying dividends as we continue to expand across multiple jurisdictions, and we add things here in the U.S. and we connect to different market centers overseas. You'll see that the value accrue both to our U.S. customers and the customers in new jurisdictions.
And Chris, one more follow up on the options take rate. We've seen that mix continue into October and actually accelerate just a little bit, and the take rate moved to 39 cents a contract in October. We'll see how the rest of the quarter plays out, but thought I would highlight that for you.
Awesome. Thanks so much. Appreciate it.
Excellent. Thank you. One moment, please, for one more question. It's from the line of Michael Cyprys. Please proceed from Morgan Stanley.
Oh, hey, thanks for taking the question. I was having some technical difficulties with the phone before. So not sure if you answered this question just around index options. I think you had mentioned previously that was coming in the first half of 24. Just wondering if you had a more specific update there that you could share. And just more broadly on that, I was hoping you could maybe share your thoughts around the opportunity set, how you see that playing out with index options. Thank you.
Yeah, I mean, one of the things that we're focused on our path to being number one in active trader market share is systematically going through all of the product gaps, making sure that if customers want a particular asset, that we make that available. This includes index options, things like shorting, multiple account types like joint accounts. There's just a long list of things that we're prioritizing and building. As for index options in particular, right now that's slated for about mid-year 2024.
Got it. Okay. And then just a follow-up question, if I could, just on advice. Just curious, you're thinking about the opportunity set there for providing customers with financial advice. How do you think about where there's sort of space in the marketplace? What are the pain points that you might look to address? And how do you think about what the right level of pricing should be?
Yeah, these are important questions. I think what I can tell you is that Robinhood has historically been like a company that values the individual and their autonomy in making decisions and controlling their finances. I think as a self-directed platform, one of the things we prided ourselves in is putting people in the driver's seat and in control over their finances. And I think as we think about advisory, we definitely don't want to build another Me Too robo that just puts you into a basket of ETFs and does tax loss harvesting and things like that. We think there's a real opportunity to give customers the type of high-end financial advice that if you're the CEO of a company or a high net worth individual, you could get by paying a lot of money. Except we want to offer that at a really attractive price point using modern technology and make that available to everyone. So that's kind of the ethos behind the product, and we'll definitely share more as we get closer to unveiling that.
Great, thank you.
Thank you. And this concludes the Q&A period. I will turn it back to Vlad Tenev for final remarks.
Yeah, thank you, everyone. Very excited to have you listening to this call. And we're only at the beginning of our journey. So much more to build. So we're going to get back to work. Thank you.
Thank you all for joining. You may now disconnect.
Yeah, stock's getting destroyed after hours. I think.
Yeah, we're down 9%.
I think. Do you guys get to hear at the beginning they were talking about the legal fees? Did they mention anything like that for next quarter? I couldn't.
Yes.
No, I didn't pick up anything, but yeah, maybe Arny wrote something.
Well, regarding what they expect for the quarter, they said, okay, we are going to spend a little bit more for marketing, for product launches, and some legal expenses again.
That's why we're dropping the legal expenses in Q4. That was kind of unexpected. So I think that's why. But I mean, now we're trading below book value. I don't know.
No, not yet, but almost there.
No. You're talking about enterprise. I'm talking about like tangible book value. We're at 1.01. before earnings.
The book value on the
Not quite yet negative
balance sheet,
enterprise
okay.
value, but
Well, the negative enterprise value is below 7 more or less.
right. Yes. Yeah, we're not quite there yet, but we're already below 1.0 book value with the drop after hours.
Are you concerned about the drop of almost 10%?
In terms of stock price?
Yeah.
Well, I mean, I'm not necessarily happy about it, but you know what I'm saying? Like, I'm not gonna sell because of this.
Do you
The
think it's
results,
justified?
I mean, they're essentially selling $1 of stock for 0.9 cents. I don't know, something like that. It is what it is. I don't think it's warranted because we're still growing 29%. I mean, 29% revenue growth is not bad, especially in this environment. But I mean, people are gonna sell because people are gonna sell. I mean, there's nothing much we can do about that. But the results themselves are not bad, especially when they're getting into the UK.
Well,
Yeah,
for me, it's weird to think that basically the stock is at the same price where it was 2 years ago, more or less, and the business has matured a lot. So same price, definitely not the same company. Actually, we are on the low range of the 2-year 2-year range. And I would say if we exclude that 100 million it's called a
Legal
fee fine, call it however we want. The business is actually doing okay. Like I would not complain at all. It just takes longer than we probably expected to see the dynamic change. But doesn't it really reminds me Palantir when it was in a similar stage, basically almost there with gap of profitability. Meanwhile, they didn't have any pressure from making money because the operations were profitable. And here we have a lot of profitability in terms of free cash flow coming just from the cash on the balance sheet. So the risk on the downside, in my opinion, is quite low, unless they completely screw up the international expansion that would lead to a waste of money, which I don't think it will be the case. Obviously, here I'm more speculative because we will have to wait for a couple of weeks to see how this ends up. But one thing that stuck to me related to the international expansion. Well, actually, two things. First, we had some details on the UK, and it seems the offering wants to be focused on subscriptions and
interest.
security lending. Basically, my speculation, given this information, is we want to give a gold subscription, maybe a little bit more expensive than the normal one in the US, but to basically get good yield, very good yield on the securities you keep. Basically, let's say you have 100. I'm exaggerated, but $1 million in Tesla shares, you can basically use them to lend it to someone else, maybe for short sellers, stuff like that, and basically acting like using your shares. Well, basically you own the shares still, but the broker rents them to another people, maybe for shorting, maybe to match another position with trading. But that is something that is already done, for instance, by my broker. Problem is I almost never get paid with that. Maybe having a very active and broad platform like what Robinhood wants to do, that can work very well. So imagine you have 1 million in Tesla share. Imagine to be paid while also having the shares, just because your shares go around to people that actually need those shares. So potentially, if that happens, if you have a big enough portfolio, that's an amazing way to make money because you literally have no risk. The shares are still yours. You just get money for owning the shares. And maybe by matching with a subscription that is appealing, they want to basically gather assets so that people can actually trust the platform and then gradually build other things.
I thought they're gonna offer equity trading as well, right? But I mean, he didn't quite mention it, but he said 24-hour trading will be offered because that is kind of internal, right? They just match a seller with a buyer, right?
Exactly that. They said for the UK, apart from the things that he couldn't say, he mentioned equity and 24-hour trading. The very cool stuff, that is something I didn't really think, and he mentioned, and I think it will be not paid much attention on, is how powerful the 24-hour trading can be once you can match orders from all over the world. Basically, once you have this infrastructure, right now you can match orders between buyer and sellers only in the US. Maybe I don't know if they only match Robinhood accounts.
They have to
with Robinhood accounts or even someone else.
They have to because the market maker doesn't allow. I mean, I don't think the market maker allows. Let's just say trading at midnight. Like, do you think Citadel is gonna be like, hey, give me your orders. I have a dark pool at 3 a.m.
Maybe I frankly don't know about this, but it could be. But I think the core idea here is if you have this pool of users that goes wider with how different time horizons, then you have more opportunity for matches. Therefore, clients happy because they get a lower spread. Robinhood happy because it gets. Wait a second. If the UK orders go through the US platform, as he said, basically that can allow the order flows.
Yeah, I mean, I think the 24/7 trading, well, it's 24/5, not on the weekends, but I think the only way to do it is limit orders. So it's pretty easy to match internally, right, as a market maker, because all your matching is bids and asks. There's no market orders. There's no shenanigans. It seems like it works internally, So if let's just say somebody in Paris is trading with somebody in New York, I mean that will increase volume. Now, how do they make money on that? I don't think they make money on that unless they have a way of monetizing the spreads, but I doubt so because it's limit orders, right? There's not much of a spread. You're just matching buyers and sellers, bids and asks. But yeah, I mean the volume, 24/7, that opens up the whole world.
Do you think there's a way maybe where Robinhood sells the data it gets from trading? This is very speculative, but how you can monetize this 24-hour trading apart from sustaining the cost?
How do you monetize? I mean, gold.
Is gold enough to cover the cost of running the infrastructure?
More than, but assuming that people buy it. So the problem is the take rate for gold is like 10%, maybe less than that. But I mean, if everybody bought gold, that would be extremely profitable. It would be like a Costco kind of thing where they're just printing money. But yeah, I mean, it's one thing that I noticed is, they're going to do a 24/7, whatever, trading in Europe. I mean, that kind of slipped from him. But the one thing that I'm worried is all this legal charges. What is all this legal cost? Do you think this is like the cost of getting into Europe, or do they even like specify what the hell is this? Like, this is so random.
They mentioned a little bit about licenses and stuff like that, but they didn't really go into detail as to what, when, how, why. I mean, yeah, I don't know. And the analyst didn't even ask. So I was like, bit strange.
Well, maybe where it is just regular since there is something still going on. I think they got many sues. How you say it when someone sues lawsuits all together, and they still have things to manage. I was actually kind of relieved about this 100 million fine or charge or whatever. That made me think, okay, finally this is done. It's just $100 million less in the cash account. Okay, let's go further. So there must be something still on. So right now, if I were an institutional investor, I would not be convinced of this story yet.
They call it. Sorry, go ahead.
So probably I would be interested for the valuation being low, but the story at this point, even if like personally, I think it is a nice moment for me because it's like Palantir when they already made the switch, they produce cash flow, we just need to put the turbo to make it unlock. And I think it will happen. I don't think there is enough evidence from an institutional investor right now to be convinced that, okay, this story actually is a good story.
I agree. I mean, especially after the call, they seem pretty depressed or something. I don't know, especially around the crypto revenues. Like it seems like the crypto volumes are just now picking up, even though we're, the prices are going up. Yeah. It seems like a lot of people got burnt with crypto. So that's one thing that I'm worried about. The crypto revenues just not coming back, even if the crypto prices go back. I mean, it sounds kind of like unheard of, but I mean, it could happen.
It means that someone else is picking up all the action, which.
But that can be because they're gaining market share against Coinbase. So it's not that they're losing market share in terms of crypto trading. It's that there's not crypto trading. The only reason Coinbase can get revenues is because Coinbase has fees.
And actually very high fees. I don't
very
know
high fees.
How it is now, but I remember I started getting interested in crypto to understand, okay, what VF is this 2014, 15, that period, and I was not charged much. I was super charged for just buying some crappy Ethereum. So, and I remember the fees stayed high. So.
Yeah, I don't see a good reason to use Coinbase for trading over Robinhood right now. I mean, and that seems to be the case, especially with for whatever reason they can measure the volumes, at least some of these analysts. But yeah, I mean I'll be surprised. I'll be curious how some of the Bitcoin miners did today, because we had a bunch of them reporting, like Marathon and also Hub, one of them or two of them were reporting today. So I'll be curious to know how they did, because that gives us a good idea of, they just added 3 cents charge for options.
Someone commented about this to me on Twitter, but at the end of the day, it's not something that Robinhood really takes. It's more like a regulatory charge, as far as I understood. But for instance, you see the comment, Rocky Bobby, I just made $25 last month from stack lending on Robinhood.
Yeah.
How much was it in terms of yield compared with the amount you shared, if you want to disclose it?
This is my Coinbase balance.
You're banking there, bro. You're banking. Saving for a house?
You know that I still have like $50
Trip
there.
to Mars.
I basically put 500 euros back then, and then I said, okay, I made a very little gain. Let's get the profit. I don't want to think of crypto any longer. Bad idea because it was very early, but and I kept just $50. I don't remember if they were in dollars or in Bitcoin or whatever. The problem is that when I wanted to log in again, they asked me like, a password with a check that I have no idea how to recover it. It was annoying, so I was okay, fine.
Yeah. I'm looking at some of the miners. We had Riot, Marathon. They were meh. At least Marathon. Let me see. Riot. Did they do anything good?
Okay, so
No. I mean, it's break even, kinda. Like slightly down after hours. So it looks like even though Bitcoin and crypto's going up, it's just we're not seeing any enthusiasm, and that's the first thing is gonna go up after interest rates come down, because that's like a sponge for liquidity. But yeah, people, there's no interest. There's really no interest in the market for crypto right now.
I mean, I can understand.
Yeah.
Life is still expensive, so.
Mm-hmm. And a lot of people got burnt last bull run. So, but isn't that always the case though? Like every single bull run in crypto, like a lot of people get burnt, especially on altcoins, and then they just have a bad taste in their mouth after. But the next one's even bigger always. So, and it's happened like 9 times already. So, I don't know.
Well, every time I think crypto's done, then it returns, as you say, bigger and more violent. Personally, I'm not a crypto fan. Never, like, I wanted to study to understand what it was, but I'm not convinced and neither sure it will stay. Yet, I like the idea of Robinhood providing it as a service and in a very different way from Coinbase, which, as far as I remember, maybe things changed. Basically, their balance sheet income statement was all shaky because they were charged directly in the crypto and then convert in dollars, while Robinhood is paid directly in dollars. So they have no crypto risk because basically they charge in dollars for the order.
Yeah, it's like a little bit of a call option on the crypto market. If the crypto market all of a sudden gets crazy, then you see the crypto exposure go up. But I mean, most of the money comes from option trading. Not even that's one thing I wonder. Are they gonna allow that in Europe? Because I don't know if that is allowed through 24/7 trading.
But the options?
You know? Yeah, the options. The options are not.
It's probably one of those things that when they said that they will have to look to get some license and things like that. I mean, they didn't say it specifically for options, but I mean, probably if they want to offer it, I would guess that's one of the things you would need a license for. But with crypto, I think opening up to the EU market will already have a positive impact on their crypto revenues, even if it's not that much, but it already, I mean, open up a huge new market, so that will boost that segment. Question is there going to be a huge demand? Yes, no. How much of an impact will that be? How much expenses will that be as well to open up in those markets?
How easy is it in Europe to all of a sudden just get 4.9% and on your cash? Is that like super easy? How would that even work?
Not easy at all.
Nope.
Like for instance, in Italy, most banks neither give you any interest. Like for instance, my broker doesn't give any interest right now.
My bank is at maybe 1%, maybe.
Oh, wow.
Keep in mind that the interest rates from the ECB right now are 4%, if I remember correctly, so they're lower than the Fed, while the real risk for the European government bonds is actually theoretically higher than the US. So that's already something that doesn't make sense. But then basically people don't pay so much attention to these details. So they could make stupid stuff like investing the money into, it's called conto deposito, where basically you put your money locked for 6 months, 1 year, because that is something they advertise well. Oh, you get 4% on your cash. But then you think, okay, but if I invest in the government bond, so rather than having the risk on the bank, I have the risk of the government. I get basically the same. Yet, for instance, in Italy, government bonds are taxed 12%, while that blocked account is taxed 26%. So at the end of the day, it really makes no sense. But if many banks actually push that product, it means that it works.
Yeah, yeah, okay. Because I'm seeing like the cash sweep just exploding. Like we had, what is it? Like in terms of growth, it's like ridiculous. We're growing like 400% or something year over year in cash sweep, but everything else came down because that's one thing they can definitely like monetize on the UK launch like right away. You want your cash, you want your 4.9%, give me your money. Cash sweep explodes, and then if they want to trade equities, but it does seems like the option part is the one part that they need to figure out still.
Mm-hmm. Well, cash sweep I think could work very well in Europe, also because there is fear on the banking sector, stuff like that. So if they can ensure that your insurance is actually way higher than the normal banking insurance, that could be a good plus. And that automatically actually would attract people who have more cash. Basically, to think this way, it stuck to my mind that it was at an episode of Violin podcast where Jason said, "Oh, if there was only one product that could make me have a vacation yield while also being completely free, meaning that if I want to use the cash, I can use it, not locked, and I could even pay a little percentage just to know that that cash is insured. Hey, that's cash sweep."
Yeah.
I mean, if you look at this, let me show you this page right here. September was really, really a rough month.
Yep.
I mean, net deposits in September, just 1 billion. Crypto, horrible in September. I mean, yeah, everything in September was horrible. That's what brought basically the whole thing down.
Yeah, look at the volumes. I don't know if that's where I would. They have a little chart. Let me see if I can get you a page. But essentially, they show like all the different like types of volume and how like Q3 was horrible. Let me see. It's 22, 22, 23. Actually, 23. So look at those volumes compared to like what we got last month. Look at crypto. That was brutal, And then look at the option volumes too. Brutally bad. Like it was the worst since April of
23.
Yeah, look at that. It can change on the dime like that. It can change month to month. But that's why that's the hit. The trading volumes on everything. Brutal for Q3.
Did something specific happen in September that we forgot?
I remember I posted a post on specific on Palantir showing how interest on Google on Palantir was actually very low, and I shared this matches the fact that there is basically no people making YouTube videos. Everything seems so sad, and then boom, now interest spikes up. So
yep.
The fun thing about these things is they are completely random and they just happen. You don't know when, but things like this happen. It's not really seasonality because if you see last year in September, there were still a lot of volumes, for instance, in the options. August, September was when the market was going down. There were a lot of fear, while last September, it was basically no emotion. I also mentioned that at Palantir Weekly, I said, the market is a pendulum between extreme fear and extreme greed, and right now we are stuck at the middle. We are in the agony period where basically there are no emotions. We are just waiting for a direction to take.
Yeah.
I mean,
which is the worst for a broker.
if you look at August 2022 with equity volumes, for example, you can see a huge drop as well here. September crypto, September as well dropping last year. Options same. So yeah, maybe September. I don't know. I would have thought maybe August would have been a worse month, but yeah.
No, August actually like one of the better ones. But June, just look at June, bro. June is that's when the interest was like really high. June and July, incredible. But yeah, I mean, I think it has a lot to do with just stocks going up, pretty much. If stocks go down, then the months after that will be bad for volumes. But if stocks go up or start going up, then you start hearing the hype. That's the thing that I started feeling mid this year, because we had Q1 just being so good, or the fear was really high, and then the stocks went up. Like we had Tesla double, we had Meta double, and Q1. So Q2 turned out to be really, really high volume because people are really excited. So if we had like pretty good Q4, then Q1 I think it's gonna be good in terms of volume. It's just a matter of sentiment.
What did you get from the quote that I wrote? That trading volume in October picked up a bit, options and crypto in line, and then equity 10% below. Can anybody double check that if I did a mistake or not?
Guys, since he mentioned it, but he didn't really disclose that. He said they are number 2 in retail trading. Who is the first one?
Really good question.
Because I would have said Robinhood is the first one in Robinhood in retail trading. It means Schwab is the first one?
No, Schwab doesn't have. Well, I guess I'm not sure because
they got Ameritrade, so maybe after the merger.
Yeah. Now after the merge, they're over 30-some million users, something like that. Because before they had something like 29, 30, and now they have almost 40. And then Robinhood is, we oscillate between 10 and 20. But even with lower sort of like monthly active users, the volume is pretty comparable.
Well, they mentioned that they're gaining shares, so that is possible.
Mm-hmm.
And overall, like if you look also the other brokers, like Interactive Brokers, I mean, there is a general weakness in the transaction side. So basically, not surprised. For instance, Interactive Brokers had commission revenue increased 4%.
Yeah, pretty much.
Options contracts volume up for 18%, while future contracts and stock down 1% and 22%. So basically, for Interactive Brokers, options up 20%, futures down 1%, and stock volumes down 22%. So basically, it's like the sea that has the tide that goes up, goes down, and brokers keep fighting to increase their market share while waiting for the tide to go very, very high. And you don't know when it will happen. You know that sooner or later it will happen. The positive side on my side is while you wait, basically, I don't see a company risk. It's like, as I mentioned, like Palantir once, it started making free cash flow. You know that it can't go bankrupt, and they don't need to raise more capital. So it's more a problem of how much time it really takes for the story to change. And that can actually change potentially in a little time, but you just don't know. So what do you think can actually unlock the story at this point?
International expansion, pretty much.
So if the UK launch actually has a success, do you think it can change the trajectory?
Yeah, pretty much, because you get you don't get any change in terms of like contracts, but you get a lot of change in terms of cash sweep. Like all we need is assets under custody. That's it. You get right now we have 15 billion, right? Say we have, I don't know, 20 or 21. where interest rates, where interest revenue is in that scenario, where you can, I mean, it's not that difficult to get $10 billion in net. We're getting 4 per quarter in a bad quarter. So think about all these people that are in the UK or Europe that would want that kind of yield, and then that's straight up profit. So they already built the system. They just gotta market it, and they have to capitalize on that. So that's one thing that could change the whole story. And then another one is if we have a bull market, but I have no way to predict that. I have no way to predict when people are going to be hyped about stocks or crypto. Doesn't seem to be the case right now.
What do you think the impact of credit cards, the credit card business will have? I mean,
we had something like 5 million in revenues. I mean, because right now they have a debit card. So it's only on the debit card. The credit card is obviously going to be on top of that. So, I mean, all of those are extras. They're going to be small extras, but they're going to grow fast. But I'm not counting on them because I have no way to predict that. I have no way to predict how many people are going to use their credit card.
What do you think is the goal of a credit card? Is just to make revenues from interest income?
Yeah, they will make revenue on interest, but I think it's just a matter of so that people don't go elsewhere to get their credit cards, that kind of thing. It's like an add-on, like
another block in the walled garden that they want to build, maybe. Yeah,
pretty much.
Plus data collecting. They did say things about data on their customers. They said that X1 has already plenty of data, but now they're in a period of learning new data from Robinhood's customer base. Maybe they can do something with that. Remains to be seen.
In the interview, he mentioned something related to you use the credit card, the more you use it, the more you are rewarded. That's the idea, and potentially they can reward in shares. Maybe by knowing your tastes, they can reward the shares that match your tastes. Imagine something crazy like that. Like you go three times per month, 5 times per month at McDonald's, and if you pay always by card, you also get some McDonald's shares.
It's the posts on LinkedIn and on X. Don't buy Nike shoes. Don't go buy your coffee at Starbucks. Instead, go buy shares of Starbucks. Go buy shares of Nike. The meme is becoming maybe a reality, but yeah, I don't know. I mean, it's the whole thing with X1 is that you get to your rewards the more you spend. So I don't know what special thing they're going to do with that, but yeah, I mean, the international expansion is going to be important, but I think there's still a lot of growth in the United States for them. And to move the stock, they don't really need to do that much, especially not now after another 9-10% drop.
I mean, right now the market thinks Robinhood is value at 0. Kind of.
Yeah.
That's what the market thinks. Yeah.
8
Robinhood,
billion,
0.
Is that no chances of surviving? I think it is just a matter of patience. It's not about being wrong. Basically, the big problem is
sorry, go ahead.
Imagine you're an analyst right now, and you need to make an investment case for Robinhood. What appealing points can you make that justify the fact that okay, we need to buy this now?
You get it for free. You get 10 million users, $2 billion in run rate, and cash flow positive, growing, I don't know, 30%.
Yes, there's value, but an asset manager tells you, okay, there's value. What's the story? Like why it should go up?
No, I mean, it doesn't have to go up. That's the thing. But they could buy back the whole company at some point. Like say their cash balance gets to 10 billion. They could buy back the whole company. I mean, at the end of the day, it's just, bids and asks, right? Like if you don't control the order book, you just buy your own company back. Like.
No, at one point there will be sharks circling around, maybe wanting to take this private.
I mean, for a private equity perspective, that would be very interesting. I don't think Vladi would sell. Given
to us, maybe to us.
To us, maybe. Imagine if internally they push people buy our Robinhood shares.
But I mean, he's 7% of the company, right? He's not like Elon, right? He's 7.92. Well, 7.92 between them two, right? So I just count that as one. But he doesn't have a say as Elon Musk. You know what I'm saying? But he does have a bit.
Well, there are still the dual class shares that give a lot of
Do
votes.
they?
I don't remember how many, but I remember the dual class shares also here.
I have to look into that. I don't know what the breakdown is between classes here.
But actually, it is weird that I think there was all that frenzy to acquire brokers, Schwab with Ameritrade, Morgan Stanley with TD America, or maybe the inverse. And then now that actually the valuations are at cash level, like from an M&A perspective, imagine the pitch is already done. It's like, okay, you pay this company $2 billion, you sell it, you sell you take the cash, you sell the technology, voila.
Yeah, easy money. But I mean, nobody's looking to that. It's just the sentiment is not there. So I mean, that's why we buy it low, right? Like buying low is really not that complicated, but it is difficult because it's like the sentiment is not with you. People are just calling you stupid all the time on Twitter. So that's why people don't buy low and sell high, because you're not incentivized to buy low and sell high. You're incentivized to buy high and sell low. You go with the herd.
Tomorrow I will provoke a little bit on Twitter to see how many people hate me. If people hate me, it will be a good reason to add.
Yeah. Anything specific that stood out from the call? Last final thoughts here.
I think it was very interesting, the comment where the question of the analyst asked, are you interested in becoming a market maker?
The B2B thing, yeah.
Yeah, and they said, no, we just wanted to provide the customers the biggest value through subscriptions, security lending, stuff like that. And the question was related to international. Basically, he was asking, okay, how are you going to monetize in Europe? So that question was quite interesting. It was nice to have a confirmation that the rumors that were spreading around the internet that Schwab is actually having problems in consolidating the acquisition seem to be real. And I can see that Schwab is very similar to the bank I'm using, and that would works nice for people that are more sophisticated. But for someone that just wants to do everything on mobile without even logging in once on the desktop, that is not an appealing platform.
Yeah, pretty much. For me, I just want to know what the legal cost is going to be for Q4. That's it. If I can, and I think they said some numbers. I gotta look at the transcript, but I want to see what the cost is going to be for Q4, because if the costs are, I don't know, 50 million, we're profitable on Q4. So
I don't think they said it as a fine. It's more we need to still keep paying a lot of legal fees.
Right, but they call it regulatory accrual, whatever that means, right? Like, but I just want to know how much it's gonna be in Q4. If I can predict that, I can predict profitability.
Yeah, and they didn't give any kind of size. I would prefer, okay, it's 1 billion fine. Okay, fine, let's go.
But I don't know if they said it was a fine. Did they say it was a fine?
No, regulatory legal
accrual. What does that even mean, bro? Like,
well, it's scary. Like when I was very little, the way my mother used to scare me when I did something bad, she didn't call me out in the moment. She just said, "Later we talk." No, please, no.
But yeah, we're just gonna have to wait.
Well, the nice info that I like they underscored is what we mentioned at the beginning of a stream. the costs are basically fixed. So if right now Robinhood can operate, and it seems it can operate still well with way fewer employees, basically you have a structure that the costs are fixed, and by increasing the revenues, it can become very profitable. The goal is clearly to get like percent EBITDA margin or so, and that would be the brilliant case. I think we are just early.
Yep, pretty much.
Crossroad roads. Arny always causing trouble. Always.
Always, bro.
I'm even. Today I was even blocked by Arny, a cloner.
Yeah, you can get a sense of when there is interest in the market whenever you get a bunch of like fakers.
Mhm.
But yeah, we're not there.
Well, for instance, I think a good thermometer is the famous on Twitter fear grid index. Right now we are stuck at the middle or almost there. So that is like the worst thing you have. Like you need to have or extreme greed or extreme fear to make a lot of money on transactions.
Yeah, and in Q3 we were, just as you said, we're garbage. It was pretty much garbage. And October started getting better, but we won't see that until Q4, results.
And now the VIX started acting quite wildly because it got a spike in October, and for instance, in these 2 days, it was like boom.
Yeah, because the market went up a ton for a whole week.
So basically, we just need to wait until an emotional loop actually starts to get traction. My experience in market is that market don't stay in the limbo too much. At a certain point, there must be a narrative that is or positive or negative that keeps being reiterated. And even if interest rates seem to be the narrative, I think at a certain point, people start to get bored of that, and media needs to pick up something new.
I mean, the current consensus, it feels like most people agree that we have peaked with regards to interest rates. Now the question is, when will the cuts arrive?
Do you
Remains to
believe
be
that?
seen. That we have peaked?
Mm-hmm.
I mean, the consensus that you can see on one of those websites, I forgot the name. Yeah, most people are not expecting another raise right now.
Yeah, on the CME Watch tool.
Yes.
Exactly.
That's the problem I have. I mean, when everyone agrees on a forecast, that is the moment where basically the price already implies that.
I mean, that's maybe why we saw a little bit. I mean, the last 2-3 days of the week was pretty green, probably because of that. And then, 2024 at the end, 1 year from now, there's elections. So that's also maybe playing a little part there. But with regards to the regulatory accrual, so it's an accounting entry that is made to reflect the impact of future regulatory actions on a company's financial statements. So for example, a company may be required to make future payments to regulators, or it may be required to set aside whatever cut out here. Why didn't it?
So it's like they keep money aside,
or they make prepayments on things that will maybe
could happen.
Yeah.
Could be that a way to avoid taxes? Meaning that
to set aside reserves for regulatory liabilities.
I mean, imagine this. Maybe it's something stupid, but the first thought I had is if you charge yourself basically with some cost that can happen in the future, but that they will not happen, or they will be lower in entity than what you do. Basically, what you do is creating some cost that generate some losses, and if you have these losses, basically you don't have to pay much taxes once you are GAAP profitable until you cover this cost.
Yeah, could be for one of the launches that they're doing. I don't know. I mean, when I pay taxes in Belgium, I also make prepayments, so it doesn't. So I won't be charged more eventually. So yeah, maybe it's a bit of the same. I don't know. Not an accounting expert or regulator, but yeah, that's basically what's happening. They could have given us a bit more information about that. That would be nice, but I guess nope. But yeah, look, overall, I mean, it's not like we're priced in at super high valuations or what's not. So yeah, the stock is reacting again. When we're in the market, I believe, show a little bit of weakness, you will be heavily punished. Doesn't matter if you're undervalued, overvalued, you're going to get punished. And yeah, I mean, we can be right, but in the short term, the market might say, no, you are wrong. And that's basically how you get rid of weak hands, in my opinion. But nothing really broke the thesis for now. I mean, it wasn't the best reports ever, but what did we expect? The bar was still pretty low and still low right now.
I think these last years gave to many people the impression that every quarter release is like a big event, while in reality that is not. Like I invested for many years in Italian stocks, even without hearing one conference call. I was I neither knew that Amplifon was reporting. I just opened the press release. Okay, we're just growing, fine. I mean, that is how I was used to invest, and now we are all here. Well, we are enjoying it. It's great to discuss, but you need to consider each quarter as just a hint of the direction. So while it is great to share opinion, trying to grasp the little hints, at the end of the day, what you really need to see is the trajectory of a business. And how is the trajectory of a business now compared with, let's say, 1 year ago? To my eyes, is extremely more favorable, despite the unfavorable conditions. The business is actually doing, in my opinion, very well. Now, it can obviously do better, but overall, I'm happy to see, okay, the company right now is ready just for the next wave. When it will come, they will surf it. They just need to wait right now.
Yeah, and if you were to buy at cash, that's not a bad place to be, you know?
Exactly.
So yeah, pretty much.
The risk reward favors the reward here by far.
But yeah, we just gotta wait for next year or Q4. I think Q4 is gonna be good because we, as we said, we had the big spike, and crypto should pick up a little bit. But I think we're profitable in Q4. We'll see.
Well, at this point, I actually hope we go to the cash level, because I think that would be a very good asymmetry between how the business goes. Because if you are priced at cash level, it means that basically the market assumes your business is completely worthless. Like
Sorry, go ahead.
No, imagine if tomorrow Robinhood opens in a gap down like a minus 20 rather than minus 10 because people freak out. Like, I mean, potentially possible, because after 2 years of being stuck at a loss for most people, I mean, a drop like this kills your brain and your patience. Okay, so maybe that can happen. So let's say it goes to cash level. Trading at cash level implicitly means that all your future free cash flow are worth less than nothing.
Yep.
Neither the future interest income you would get, neither that. So that would be one of those situations where that potentially could be written in the book, in my opinion.
Yeah, they've actually traded a negative enterprise value earlier this year. and last year.
Yeah, but they were burning cash at that moment.
True.
So while now, if even with these low commission revenues, make money thanks to the cash, thanks to the other things. Basically, the bankruptcy risk, like the risk that the business burns cash for enough quarters, years to gradually erode the cash, is non-existent. If obviously the business keeps making EBITDA things. So until the EBITDA stays positive, the company produces cash, is basically creating options on options. And if you can buy that at cash level, it means that you buy all that optionality for free. So I consider it, like, while I consider, for instance, Palantir growth investing here is a growth investing, but the price is truly a value.
Yeah, pretty much.
Were you expecting maybe a buyback?
No.
Besides the one we did?
No, they mentioned it last time that they were not interested in making dividends or further buyback. I think they wanted also to buy back to basically detach from SBF. And because potentially they could have bought the same amount of shares in the open market. I mean, that would have not been beneficial for the float, because you would have those shares that were not trading still stuck. So having some shares back home, it is good. I don't think it would be wise right now. I actually liked the idea of, okay, right now our priority is now to make the business grow in terms of active users, the products and stuff like that. Not the time. Like, that was a special situation that at a good price made sense. By far right now, it's nice to think that the stock as of right now is basically 20% lower than the price they buy back to 10. How much was that? Was it like a 7% of a company?
Yeah. I mean, right now we're back at prices not seen since, well, 2 weeks ago.
Well, this is without the pre-market, right?
This is now post-market, yeah.
Post, okay, there.
So we're at $8.93.
Okay, so the ideal case for me would be people freak out dramatically, because I think many people just jumped in looking, but it's cheap, can't go really lower. But if something like that actually starts dropping like 10%, I think, for instance, what is the percentage after which let's say you make a small trade on Robinhood. You don't have Robinhood, you start a position because, actually, yes, trades at a cash level, it must be cheap. What is the point where you start freaking out because, oh my God, I'm down?
Depends your cost basis, but...
Well, let's say you started, in general, like, what is the percentage drop that makes you start thinking, oh, I'm an idiot?
30%. I don't know. It's
in the short term.
In the short term, let's say you start a position in Robinhood around $10, which is where I think many people actually started buying more, and then it drops. What is the psychological limit after which you start thinking, oh, I'm an idiot? That starts making you nervous.
Probably you rethink it if you see it at 8. You're like, let me double check. But then after you double check and you see nothing exchange, you're like, okay.
Because, for instance, in my case, if I start a position and it goes down 20%, then I think I'm an idiot. I was not careful enough.
But are you an idiot because you could have bought it for cheaper, technically wise, like on technical basis, or because of the business? Because for the same thing, I mean, it could have gone up 20% for all we know. I don't know. markets
Yeah,
are
but
acting crazy.
if it goes up, I'm a genius. If it goes down, it's the market. No. No. What I'm trying to share is psychologically, if you get a drop of 20% fast, there's
sucks.
probably something wrong in what I did, or in terms of position sizing. I mean, if let's say I buy one share and goes down 50%, that's not a mistake. But if I have a position and that position actually hurts me once it goes down and makes me annoyed, it means that I made something wrong, or I didn't assess the framework overall well enough. So when I started going more aggressive, or just the fact that I was more aggressive than I should have been. So for instance, right now I'm down like 5%, something like that. And with this drop, I go down, let's say 10%, so minus 15%. Personally, I'm not scared, but I think the average investor, once it gets like minus 20, 30%, then start thinking of all the other slide that starts, that is keep flowing around Twitter, like the gain you need to recover a loss. And after the 30%, the gain you need to recover starts actually becoming quite important. And then people gave up. It's like, oh, no, I will never recover from it.
Yeah, I think we just gotta wait for the Europe expansion. And some people are gonna panic. So, sorry, go ahead.
I think with the launch, because they're going to reveal stuff in the launch that they didn't want to reveal in the call, which could be a positive catalyst for the stock itself.
Good point.
But yeah, we'll see. But to your point in your story, look, let's say you bought here, April 10th, was at just under $10. Then it dropped 2-3 weeks later, 16% down. But then, I mean, a month or two later, you're up 30% in your position. So, I mean yes, you feel...
way. When I shared my thesis on Robinhood, I bought it at 9 and it went plus 40% in 2 months. Like that's insane. But all the people that bought from me were already down a lot. For them, a minus 10%. So from 11, 12, if now they're already suffering because it's around 9, so they're down like 20%. If you give them another 10%, that is a good reason for make all the people that bought there in the 11, 12 range freak out, in my opinion.
Yeah, if it goes back to $8, they're now down 27% or so. But yeah, at the end of the day, look, we buy parts of businesses if the story is still intact. I mean, if it's cheaper, if it becomes even cheaper, if it goes to $8, I don't know if it will. I mean, why not go and drop my cost basis? Not by a lot anyways, but...
yeah, right now I can give you sort of some ratios if you want. We're at 4.32 PS ratio, price to book 1.05. All of this not including the aftermarket. If you do enterprise value on that, then it gets really, really, really stupid. But price to free cash flow about 5. Yeah, so we're 4 on PS, on free cash flow 5, and on price to book below 1. Revenue growth 29%. 3-year revenue growth 20%. Yeah, and obviously we don't have any profit growth because we're still negative. But if we do the on EBITDA, then I don't know. I have to calculate that. But those are some of the valuation ratios right now.
Imagine if you were Sequoia that is on the board. How would you manage it? Basically, all the money you put into are almost gone.
Buy more.
Well, that's the interesting thing. Like, if I were a Sequoia, even like knowing from inside that people, like, I would be happy to buy more. But that is something that you never see. Like the venture capital actually doubling down. For instance, TL doing the same with Upsellera. He has a nice stake. He bought at around $20. Upsellera now trades at $4. No evidence that he's adding or doing anything, because basically they put money in the fund, and until the fund gets maturity, they just need to stay that keep that cash there.
All right, guys. I almost have to peace out. I haven't had lunch.
Yeah.
But if you guys want to do this again, let me know. I
Yeah,
shall
for
be
sure.
here.
When Robinhood is at $50, we shall celebrate. All right.
Well,
Thank you
last time
for joining.
we didn't do it, and the earning release was positive. So never again.
Never again.
Hood sucks. Here, this is a good goodbye.
Sell.
Goodbye message.
Please more.
All right, everyone. Thanks for joining, and we'll see each other 3 months from now for worse earnings.
All right, guys. Take it easy.
Bye-bye.